Where are we? Here
Here
we
we
are.
are. Good morning, everyone. Good morning.
Morning. How's it going?
Going well, going strong.
Everybody
This
prepared for interest rate day?
yeah, good old Fed Day. Fed Day today.
That day
So don't
today.
forget that, guys. I feel like the Fed has been kind of in the background. So yeah, for anyone who didn't realize it is indeed Fed Day.
It
So
is.
don't forget.
It really has been a bit in the background. Yeah, really. It's like, yeah. But let's see what Paul has to say. I hope he has some snarky remarks tonight again, and towards Donald Trump, but I doubt it. He's just too professional.
Yeah.
He's just too professional. So, who do we have with us already? Henry, of course. How are you doing,
Morning,
man?
Henry.
I gotta have to say something about your dollar yen short shortly. And Poom, how are you doing? Tai Keith. Hi, guys. Hi, Tai Keith. How you doing, my man? And of
Louis.
course, Louis. Good to see you, as always. Darth Linux, love your name, by the way. And Tiola Trades also with us again today.
How are we doing, Theo?
Good to see you. Unbiased trader, morning,
Nice
man.
trader.
Oh man, my heart always sings a little bit for you, unbiased trader. Whenever I see you, I feel so sorry for the silver price. Not for you because of the silver price. I mean, of course, today. And yeah, guys, we have just crossed 96,000 subscribers, if I'm not mistaken. Yeah, 96,000 it says here on YouTube, and that means we're just 4,000 teeny tiny subscribers away from reaching 100,000 subscribers, which then unlocks the mega super sweepstake giveaway, like the craziest one you've ever seen in your life. We have been promised. So, guys, not only like this video, comment, you should do that as well. But remember, if not already so, subscribe so we can unlock some really, really nice potential rewards for you that you can win very, very soon if we continue like this.
Getting very close now. Very close.
So,
Let's
LJ,
do it.
have you been busy already? For you, the whole day.
Yeah, this morning. So definitely last night I got some alerts and woke up and saw the Trump comments, and so we broke 120 pretty aggressively on the euro, right the way up to 120.80, and then obviously we've come back since then today. But yeah, wild, mate. It's great because these are basically all my Q1 targets from like we were talking about this week.
Already smashed.
Yeah, from last year. They were saying, okay, I think that's where we're going, but we've gone there a bit earlier than I thought.
Yeah.
I thought it'd be sort of end Feb, first week of March, sort of after we've got some of the Fed stuff through,
Yeah.
a bit more of the US data coming back into line, that kind of thing. But we've met that target very quickly. So I'm now sitting here trying to evaluate. Is this still the same train? We've just gotten there a bit faster, therefore same direction, but just re-establish instead of sort of 120 to 121 on the euro, 124. I got to think about that a little bit more. But yeah, because we've hit all these marks very quickly. So yes, hopefully you guys in chat didn't get caught out last night by the dollar breaking down. So
Well, I mean, we've been saying this, I think, for the past half year now, if I remember correctly, that we see the dollar getting weaker. So the thing always is, of course, it like happens in sprints. It's not a slow decline. It's like trading sideways, and then all of a sudden, like yesterday night, you have these big moves. I thought to myself this morning, I think we're overextending, honestly speaking, a little bit. So I looked into some of the currencies out there. Did actually 3 trades this morning already. First one, I had one that I haven't touched in a long time, cable. Yeah, you heard me a couple of weeks ago in one of the streams saying like I almost never trade cable. Well, I did this morning because due to the simple fact that it looks for me a little bit better than euro dollar. For me, the picture is more clear. The picture here meaning that with this crazy move up, dollar weakness I had from like kind of my go-to swing trading indicator, I would call it, where I'm always looking for signals that I recently just discovered those signals work actually very well when they align well with the standard deviation. So we had this morning this the standard deviation I'm choosing here, by the way, is has a length of 250. I know you're using 120 normally. For me, I want to have a little bit of a longer term picture there. And I had the sell signal triggering here this morning, very much outside of the 2x standard deviation. So I thought that's a good trade. I can put my stop loss rather narrow. I have a target here. This is a swing trade, obviously, of 135.12 for cable. That is, it's not going to happen today. You were talking here about a couple of weeks. I have to take into consideration, of course, also at probably if that drags on too long, the swaps will eat me up. So if we see a bigger move already today to the downside as we approach the interest rate decision, and especially, of course, the speech of Jerome Powell, I might close that one already today. Same picture for me in dollar yen, but of course the other way around, where I also think we've overextended a bit. Had this morning just really a beautiful signal from my own indicator, which aligned perfectly with a minus 2x standard deviation. So I thought I'm going to give it a try. Has also nice, okay risk reward ratio of 1.5, but a chance of, if we really get this bounce back, that I can get already today. And it kind of fits in the picture. Same picture in Nasdaq for me. Also 2x standard deviation to the upside, a sell signal from my indicator. Beautiful trade with a potential risk reward of 3.4. I don't see that very often, honestly speaking. Here also we have to see, it's a bit a shame that it's Wednesday also because of the 3-time swaps, right? Today,
Yeah.
but same picture here. Should we see a little bit pressure on the market as we approach New York, I might really be tempted to either close that prematurely or to secure maybe with by moving the stop loss to break even, although I don't really like to do that. But it's funny, these signals always happen on days that are like not optimal. You have 3 times for swaps, you have interest rate decision tonight, but yeah, probably especially the interest rate decision, this is what causes stuff like this, and that we get those outliers, and especially, of course, Trump yesterday night. So let's see how that goes on. Risk here for each trade 0.25%. So maximum I'm going to lose 0.75% if everything goes against me today. By the looks of it, yeah, actually, the cable has already moved pretty good in my direction this morning.
Yeah, I think I agree with you that we are getting a bit mature, right, in this dollar selling, at least near term. The one piece tonight in particular is obviously the Fed. Now, like we said, the Fed's been very much in background recently. I also expect the Fed meeting tonight to be, or tonight my time, maybe afternoon for you guys. I expect it to be pretty boring. Probably one of the most boring Fed meetings we've had since COVID or pre-COVID, pretty much. There's nothing really much to do. The data hasn't changed too much. Inflation's all tame. Everything's going pretty by the by. Of course, Friday before last, we had Jerome Powell speaking out against Trump, and Trump, with the Trump sort of attacks on the Federal Reserve. So that very quickly went out of the picture once we had Greenland kicking off, and everyone just forgot about it. So I think coming into the Fed meeting this week, I think it will just be pretty quiet. I would expect potentially even a slightly mildly dovish tilt on it, in fact.
Probably,
yeah. So that's the only piece that I'm waiting for as far as this dollar selling being very mature. That potentially we might have like one final gasp through that and then unwind. Particularly after last night when we did have euro dollar breaking higher, pound, Aussie dollar, everything broke higher. Dollar yen didn't actually take too much of a further drop, right? On a relative basis. So it seems as though, there wasn't that hard of an engagement. Now, obviously, Eurodollar in particular was right by that 120, so it's going to give extra trigger to certain key levels, options, barrier options, that kind of stuff, and just accelerate that price action. But yeah, I think we're pretty done now. Same with gold and silver. I think near term, I think we're starting to look at some kind of topping formation. Gold definitely had the extra run. I remember yesterday I was saying I do see more efficacy for gold rather than silver at this point, and we have seen silver sort of fail to make new ground, whilst gold has. So that definitely played through. I think gold has a better story overall. Obviously, silver is massively overblown at this point. But yeah, with where gold is, I would see probably some kind of pullback from here. I think I don't see what else there is to price in.
For me, it's actually got a sell signal also aligning pretty well with the 2x standard deviation this morning. I didn't trade this one because the one thing that I don't like, being the contrarian here, is that the overall trend for gold is too steep. Even if you go back by in this case 250 Renko box, it's very deep. So this one has not a great risk reward ratio by design already, only 1.2. Of course, you could argue still okayish. My problem with taking a trade like this is if your target is here and we kind of start moving sideways, the median price will rise very quickly, meaning you end up that actually your target is as the channel progresses, ends up somewhere down here. So I would have preferred to see something like this, like a buy signal down here. But that sadly didn't happen. Last time we had this was actually, not that long ago, 21st of January. And so this is why I don't like to go against very strong trends, obviously. Because even if you have a tight stop, like if the trend progresses like this, your take profit is very fast going to be at the -1 or -2 standard deviation in terms for a short trade here. But I might be wrong. Maybe, we come crashing down today very fast to, what would that be? Not that far, actually, 5,220. Still possible. I don't like the short side of gold. So.
Yeah, not that far. I'm just like near term, probably today is somewhere around 5,200. And then depending how the Fed plays out, potentially in another little bounce from there. If we see some kind of topping after a secondary bounce from there, like a failure to get back towards the highs, I think that might be something that would trigger that sort of wave of selling a bit deeper down towards, 5,100. If we get that kind of a move, that will be very interesting as far as the structure of the daily candles. And then from there, I could potentially see deeper retracement to, say, 4,900, somewhere thereabouts. So that will be at the end of the Fed meeting today for that to sort of play through and form that structure. But that's definitely what I'm looking at right now.
I think a bit under the radar yesterday also went the durable goods with massively better than the already quite high expectation. 5.3% month over month. Expectation was 3.7%. And I think that again shows like that the overall condition the US economy is in is much better than a lot of people anticipate out there. It doesn't necessarily show in the labor market. I think that's for the upcoming years a whole different story anyway, with AI taking over more and more jobs that we might get used to, that we see an extended or higher unemployment rate. But at the same time, we see productivity boosts because in coding, for example, one AI coder can do the work of 10 senior developers at a certain point, which leads to increased productivity, at least for tools like software as a service, but also for machinery and so on. But yet, and higher margins for companies, but higher layoffs, ironically, as well. So kind of the same picture we saw back then when jobs shifted from agriculture to manufacturing, then later from manufacturing in the 80s to what is the English word for that? Like people, that like goods and like services to other people. I don't know what the English word is
goods
for
and
that.
services.
Goods and services, exactly. And now we see that a revolution again. However, that is going to end up. I don't see really where jobs can shift anymore, honestly speaking, other than being a plumber or constructor, and even that can be taken over quickly.
Yeah, that's very much the recommendation, I guess. People are saying, what should you send your kid to school or university? What direction? Tell them to become a bricklayer or doing HVAC or I don't know, typical those old school kind of trades and stuff.
Run a funeral home or whatever. That's.
I've actually seriously considered opening this as a business a number of times. So I'm actually genuinely looking at it.
I mean, that might sound a little bit morbid now for me, but my mother just recently passed away 3 months ago. So I've gone through the whole process, with funeral homes, and my mom wanted to be cremated and then a sea burial. So actually, it's quite basic, She didn't ask for much, but the bill for that whole thing in the end was €10,000. I was like, what the hell, It's like, how come this is like so crazy expensive? But there is, ironically, people always die, at least up to now, and you will never go out of business.
It's a weird business. But so I was looking at the exact same thing. The numbers of cremations going up as well. My dad was cremated. Similarly, but I mean, because it goes even just beyond. It's like a functional thing of real estate, like land. It's extremely expensive. There's no space for people, right? On that basis, it's a kind of a weird business idea, but it's definitely a thing.
Yeah, that's a good idea here as well from Unbiased Trader. Yeah, and buying a nursery.
Yeah,
like on the opposite sides, but there's like money to be earned with that as well. Especially in Germany, you can get like actually you will be backed by the state, by your state, at least in some German states, if you run a nursery.
Yeah,
it's something I never could do. I think I would go crazy with like 30 kids around me, but
definitely. I mean, to be honest, we actually do need more of them because like the costs of childcare and stuff is insane.
It's insane.
Just, and part of that trouble is because there's not enough facilities, right? So, there's a lot of these weird business ideas out there that are still very much viable and valid. At the same time, whilst other things are getting crushed, some of these are actually expanding, in use case and what we need. So. But like you were saying with the what was it? Durable goods. That goes back to what we were talking about last year as well with the projections and everything. I was saying about the US data with the ISMs, all of that kind of stuff, with as the basis for my idea for indices for stocks to continue higher for Q1, Q2 on the back of that increasing performance from US data. At the same time, whilst the jobs data and stuff doesn't look so amazing, but it's kind of just a bit stagnant. It's not really declining or anything like that. Inflation is very much under control, and looking at the health of US corporations, they've very much reduced debt. They've also heavily reduced headcount since COVID. Right, it's an effect that has come from COVID, and those measures have stuck. So balance sheets are very healthy. I think I said this too. I don't know, first week of Jan when we started streaming, I was looking for any reason for stocks to really crumble. On that basis, I can't see one. Everyone is
No,
very healthy. So outside of the big players like AI, something going wrong and that, causing a turmoil, even then I think it might be temporary. It's disturbing though at the same time, because it's one of those things where you feel like it's a bit too good, and it's
yeah.
been too good for a while, but you also can't find a reason for it not to be.
I mean, the only problem I have with this stems more like from a social point of view. It's like it feels like the rally is going to continue, but 99% of the people are going to be left behind. So the further erosion of the middle class, which has been massively declining since basically, for the past 75 years, no? Especially after a trickle-down economy introduced by Ronald Reagan, didn't have the effects they wanted to. Well, guess what? Rich people tend to keep the money in their pockets and not trickle it down to poorer people, and so it feels like it's we are going to see rising stocks, or risk on in general rising, while the normal person is left behind simply because maybe they don't find a new job anymore, or they have to spend like 70% of what their income is on rent, for example. So for me, it's kind of a dystopian scenario, honestly speaking. The only missing ingredient, not really missing, we kind of see that also is like the so-called upper class taking control over media, which is something we see in the USA already, right? And so you only hear what you're supposed to hear. Playbook of Agenda 2025, or what was their name?
Yeah, I know what you're talking about. I forget as well, but yeah, no, 100%. This is stuff I've thought about going to the future of when you have all those changes coming. All I can see and in terms of thinking how you protect yourself, all I can see is to buy stocks, buy hard assets, including real estate. Even though I hate the state of real estate because it seems so ridiculous, and I think that's the kind of one I'm a bit about, because obviously it is attached to that essential need for a society, for individuals, for humans. But I mean, in theory, you see all that stuff happening. Headcount goes way down. Those costs go way down. All the other random sort of benefits and like healthcare costs and all that kind of thing for companies drops massively. And therefore, you would see, I mean, PE ratios are not a great way of evaluating stocks these days, but they would absolutely plummet, and the free cash flow for companies would just skyrocket, and therefore stocks just rip, right? And I definitely agree with you. It becomes this dystopian thing because people that are in it are going to do very well, and everyone else completely left behind. If you're not in the market, you're trounced. And then I also think the redistribution of that is not going to be very clean. It's going to be very difficult and take some time to sort of do that, so it's very difficult in that we are probably it will eventually sort itself out, but the current time we're living in, we're going to be in that sort of transition phase. So how do you best coordinate your life to have a good life within that transition era is kind of what I've been trying to think through. It gets very weird, but I mean, look, yeah.
I mean, we shouldn't get, of course, too philosophical here as well. But yeah, this is the kind of stuff I'm thinking about as well. What is the world going to be in 10 or 12 years when my daughter turns like 20? Is she going to be able to find a job, or does she need to inherit Papa's business and become a trader as well? I hope not, man.
And then you come up with the problem is trading still here, or has it been completely arbitraged out by AI? And as an individual, you're not going to be able to.
Maybe my brain is in the
not do it in the
already.
same way.
For sure, not in the same way. It's like I said the other day, I can, for some of my strategies, especially the option strategies that have been working for 10 plus years, I can see the edge eroding already. And my go-to hypothesis really is this is also because of AI. It's like easier to find out what other people are doing and then arbitraging that away. that whole thing is very difficult. So I'm right now in a phase where I need to reinvent myself a little bit. I'm saying that, of course, from the comfort of everything that I've achieved in the past 25 years already. So, it's kind of a luxury situation, of course, to be in as well. But yeah, let's see how things are going to progress. Maybe next year I decide that it's time to retire. Who knows? It's not going to happen. I would. One of these guys, going out every day playing golf.
No, it's not gonna.
Sitting at the clubhouse, jugging beers after that. No, I cannot do that really.
It's not me either. Even if I did that, I'd be straight back to the markets right after, or I'd be on the golf course with
Yeah, exactly.
Yeah. So, Henry saying gold mining stocks. Yeah, look, dude, I got to say, one of the definitely certain things, it seems as though whatever happens is gold. I mean, yeah, it's the one universal thing that does actually make sense. Unbiased Trader was saying before, no more shorting of silver from my end. Last purchase of put option was a waste of cash.
Oh man.
Oh brother, look, fair attempt. Hey, I think we are starting to top out on silver. Like I was saying, this sort of block band. If I jump over to my chart real quick, has actually fared quite well.
We were at 120. What is there going on? 180.
Yeah, it's like 118 basically sort of topped out. Because when we were talking about it, when we were down here in this channel, basically what I was looking for is break of this channel, and then my expectation is somewhere around this kind of zone just before 120 that we'd sort of get stuck in, and that was just my guesstimate, right? Based on the not just random, it was based on partial of the ATR and the extension from here and blah blah blah, right? But that has actually fared quite well through here, frankly. And once again, the standard div bands doing some nice work there too. So obviously we came outside you can imagine the 3 standard div line would be coming through there. Sort of something like that. That would be roughly where the 3 standard div is. So we came outside of there, back into the 2 standard div pocket, into the middle point, just by the 10 moving average and the -1, and then we basically just ridden that 2 standard div.
And all within like 8 or 12 hours.
yeah, with very, very, very short time frame. I think, I mean, what gold's up like 33% this year?
Yeah.
What? And silver's up, I think it was 120 or something since start of Jan. Or almost. No, that would have been, I think I was looking at that from back here. It must have been. So what's that, like 50% or so?
And it's one of these trades, like looking back now in December, I mean, if you would have bought like call options with a strike of 100 for just pennies, that would have been the trade of a century. But yeah, in hindsight, it's always easy to say, of course.
Yeah, God. I'm starting to wonder if I haven't looked. I haven't got my I can't even remember the login details for my options account with Interactive Brokers now, but I'm wondering about downside.
Buying options, it's insane. The implied volatility you would pay right now if you want to buy a put, for example, it's insane. You probably would need like down 20% or something just to break even because of a volatility. So if you want to do something, it's like selling options with is also like, that feels like trying to pick up pennies in front of a truck that can mangle you anytime.
Yeah. I saw that downside protection for US dollar, for the downside protection, it's basically reached GFC levels for the premium for options.
Yeah.
On the back of last night. So yeah, these are definitely some extremes, So gold levels, we can definitely take a look at gold levels. How we doing, Infinity? Good to see you, mate. Good to see you. Just making sure I haven't missed too much else. Vedowin, I don't know. What's the indicator diagonal channel one on Dirk's stream that you asked about before? So Dirk had the standard deviation channel, just like I've got up on mine. So the center point is the midline. Then you got +1, +2, and -1, -2 standard deviations. I think Dirk had his settings at the past 250 look back periods. So the past 250 bars. Mine is currently set to 120. So you can play around with different time frames. That's going to depend on your time frame for the trade, etc. as well, and find what sort of works there. How is Aussie dollar looking? Aussie dollar has met my Q1 target for the next 2 months. So
yeah, time to go on holiday for the next 2 months.
Yeah. So yeah, it's quite interesting. I'll have to think about. There are some high levels towards 73 plus, which I think might be very achievable, particularly with was it? I think it was Monday. Was talking about with silver coming much higher. That if silver's now becoming way too expensive as far as industrial use at these levels. So I'm kind of wondering if there might be a deeper switch to copper, and we actually see copper being a high beneficiary of silver having rallied, and we get a bit of a rotation, silver coming back off because of that, and copper actually taking quite an aggressive further push higher. And then hence, obviously, for currencies like the Australian dollar, very beneficial. So,
I mean, copper also is like up.
It's already been ripping
by 40% since August. When we saw this super large candle to the downside there.
Yeah.
So it's like, commodities.
And then, so the other thing with copper, we have had the break of these highs, right? So, I mean, I wouldn't be surprised if we, I don't know, somewhere up towards 7. For copper. But I'm going to have to try and sort of reassess some of these targets because, this was also my Q1 target for euro dollar. We came right into basically the center point of that pocket. But it's definitely looking closer to end of Feb, sort of first week of March for these things. And then gold is, I think gold I had a touch higher, up around 5,600 here. So that 55 to 5,600 that we've been talking about, which I'm still pretty all right with that kind of marker, to be honest.
But it would be nice if we not already reach that beginning of February or mid-February.
Yeah, it's exactly. It's just it's the pace of acceleration. But I mean, like we were saying before, I think this is starting to get a bit overdone. And definitely seeing as last night when we had this this push lower after Trump spoke, dollar yen didn't take as big of a leap as the other majors.
Yeah, it's
so it
still,
seems as though this is getting a little bit little worn out.
The carry trade is not off the table yet. Yes.
No, that was one of the things that surprised me about Trump speaking like last night. I feel like that's obviously it's probably he just spoke because he spoke.
Exactly. I was just about to say I don't think there was an agenda behind that in relation to the US dollar actually.
I think it would be more a background thing. It's obviously of topic for the administration, both currently now because of what's been going on with the yen and Japanese bonds, and that lifting the long end of the yield curve for US rates as well. And it's also, major, the sort of one of the final bits or needles to thread for the administration as far as their policy
Yeah,
and everything to
yeah,
make it all come together. But yeah, I think he probably just let it slip. But normally you would sort of hold that as like a piece of firepower to actually deploy when it's needed. And the trouble is, if he talks about it again, it's not going to be anywhere near as effective. Probably get like a slight move from a headline thing, but it's not going to have the sort of power it did. So I think that's one of the cases to start to fade some of this trade, at least near term. Because again, it becomes that, what more is there to continue adding fuel into that fire?
yeah, exactly. Eventually, you run out of nuclear bombs, right?
Yeah, exactly.
We have a Korean comment here. If anybody speaks Korean, I'm super nosy what that is. At least I think it's Korean, no? It's like normally the cute little signs is Korean. And yeah, sorry, you wanted to answer that question.
Yeah, no, I believe that's Korean. That's not Japanese. I think it's Korean. I'm not sure, but I don't speak Korean, so
neither do I.
Yeah, no. So this question, unbiased trader, saying, so if you see a long Aussie USD, New Zealand dollar USD opportunity, would you take New Zealand? I would be taking Aussie rather than New Zealand. So they've got a similar framework. New Zealand has definitely been doing better recently after they had some of their struggles, which didn't really show as much in the currency because everything was kind of washed up with what was going on with Trump, regardless, right? So Australia during that period last year was actually doing pretty right, quite well, in fact. But then the currency just kept getting battered because of the risk-off sort of sentiment and that cross awkward position of Australia being in between the US and China, right? Now, hence why we've seen now that that's kind of abated and we've got that like out of the picture, the whole trade tariff chaos. We've seen the Aussie dollar having a pretty nice, relentless rally, and we've seen commodities running right up. So if you guys go back to, I think last time we had the trade competition, I was talking about this. And expecting that as the next direction for Aussie. I think Akram clipped it at one point. But so we've seen that very much play through. That's been my expectation. From here, though, yeah, I would still say Aussie dollar is your best favor, particularly because it does have that commodity portion underneath it. So New Zealand dollar will often have some good days and sometimes move slightly more as far as a percentage gain per the Aussie, but that's more linked to it following the Aussie and then being slightly less liquid. So sometimes you get higher percentage moves overall just because it's a little bit less liquid, so it jumps up a bit more. But yeah, Aussie dollar would definitely be more secure. Though I would start to say where we are now is probably looking a little bit hot.
Yeah, actually, I was just about to say that. I think also we are a little bit overextended now, slowly. Like if I look at the last, 250 bars, we are also at a point of a plus 3.0 standard deviation to the upside now. So yeah. It's like if I look for a long trade, I would actually trade neither at the moment.
Yeah. So I'd be looking for some kind of move back towards like 68.50 kind of area as some kind of base. Most likely we'll tap back into here around 69.5 by those heads, sort of play around in there, come down by that support here, and then sort of, waft about, gradually get a lower move and then run right up. So hopefully you guys enjoy my...
and Henry solved the Korean mystery for us. Can I use TradingView on my account? Can I link my account? Well, assuming that that person maybe only speaks Korean, so you cannot directly link TradingView to your Fiverr account. That is currently not possible. However, like for analysis, of course, TradingView is also, as you can see, what we are using here.
Yeah, I think there's like third-party stuff you can do it with or something, but not directly.
Yeah.
Yeah.
Yeah, you can, of course, have a bridge for signals, for example, to go over the bridge to your MetaTrader to auto-execute stuff, which is something I'm also doing. But there's no off-the-shelf solution for something like this. And MetaTrader can be quite complicated and outdated when it comes to API access.
Exactly. I was going to say Nasdaq didn't end up getting the pullback into here, which I was looking for. Sadly. Yeah. So we just ran right on. But yeah, we're approaching the all-time highs again now. So that's going to be interesting to look at also. If we get a continuing break from there. And then, yeah, we did have a question on the Dixie, so the dollar in general. Yeah, I think like we were saying before, the dollar move seems kind of played through for now. A bit mature, at least near term. We're probably due a little bit of a pullback, a bit of a reversal, go up, close that kind of gap, come to the underside of that prior sort of trading range.
However, if you look at it, if you extend your standard deviation to 250 bars, for example, actually where we are trading right now is right in the middle of a peg. And so short term, I agree, like overextended to the downside at the moment. But like long term, it's, we are basically where we should be.
250
on the daily, sorry.
Daily. Yeah, okay. Yeah, so daily, yep. Yeah, so what I'm looking for is the move down towards 90. It's just we probably want some kind of pause. So just like on the 250 here, I'd say move up into the underside of that basically the sort of local trading range that we had before breaking down and having the small gap there. So that would sort of coincide with the +1 standard div. So some kind of move back up like that over the next little bit, and then deeper drop.
Yeah, that's important. Like the overall picture is still down for the Dixie.
Very much.
So weaker US dollar, but within that structure, of course, we have microstructures. So if you go like LJ was showing that, for example, to what did you have, like the 5 minute, or what was that earlier?
I think that was daily, 4 hour, and then 1 hour.
Oh, okay. You can see that it's
5 minutes. Like
that doesn't make sense anyway. Yeah. Question from Afonso18. Hello, guys. Hope you're doing well. As someone who is new in this field, what do you suggest I start by? Any good books, courses, YouTube channels? Well, you found the correct YouTube channel already, so we can check that off the list. And what would you suggest? If you would start over now again, would you do anything different, LJ? What would your go-to strategy be?
Obviously right here with us. Obviously, you guys can, you can tune in every single day here, Monday to Thursday on the stream. And then if you guys have a Fiverr account, a bunch of us host workshops in the Discord as well, all throughout the week. And then also like a Friday roundup going into New York with myself and Akram as well, where you guys can, talk to us directly, jump on the mic, whatever you want to do. So I guess that's your first place point of call right there. Aside from that, starting fresh, it's hard because I actually feel like I'm very lucky that when I started, a lot of the social media sort of internet trumped up stuff about trading just wasn't there, right? And yeah, because I feel like a lot of that can lead you off into the wazoo, wherever. I think the traditional places like baby pips is always like a good one for people to start. I think that's always one that I generally recommend if you're just completely fresh. What's the other site that's
Does Baby Pips still have this school of Pipsology? I think they called it. This course like that teaches you like the standard things about what you should know about Forex trading before you actually start trading, like to understand, when you go long euro dollar, what does that actually mean? How do you calculate profits and losses? How do you basically translate pips to profit and losses and so on and so forth? I think that was really good. I would enjoy that also because it's quite entertaining when I would start new to understand the principles before you actually start trading. I think that's really very important. Sadly, a
yeah,
lot
so
of people go the
yeah,
other way around. They just see a chart and jump right in, but they don't really understand what is going on.
yeah, exactly. It's getting your 101s, that kind of thing. You have to learn how to do. It's like, I don't know. You first go to school when you're a young kid, right? You learn counting to 100, and then you do addition, subtraction, multiplication, division. Eventually, get to square root of this and that and whatever, and then you go to derivatives, and then gradually your math knowledge increases and allows you to do more complex stuff. But you gotta start with that base, that foundation. So I think Baby Pips is really good for that, to sort of figure out the field, and just sort of learn a bit of the what's the word, the lingo,
Yeah.
that kind of thing as well. And then from there, personally, I would start to try and formulate ideas on how the economy actually works, how markets work, why do markets even exist, what is their purpose and function, and then sort of work back from there. That's personally how I would do it. Understanding, again, that's one of those core foundations of why do we even have this chart in front of us, and then after that develop ideas and systems and approaches and strategies around actually trading those underlying assets. Yeah, I don't know if you have anywhere that you would recommend as far as, I guess, starting to build some of those core strats or principles.
Yeah, like I said, I'm a big advocate. The older I get, also of first, learn understanding the lingo, like LJ said so beautifully. There are some good books also. So Trading in the Zone, which Henry recommends here, definitely is one of those books. Don't expect to get strategies from them because, as we said many times before, any strategy that's publicly available is a strategy that is probably not worth trading anymore because the edge of it is arbitraged away. For me, as somebody, especially for my longer term investing, a book series that I very much enjoyed is from Jack D. Schwager, Wizards of the Markets, or Market Wizards, I think it's called. It's a whole series. I think there are 4, 5, or 6 books out by now, because it showed me. So basically, Jack Schwager interviews successful traders, like with a proven track record. So really successful traders. And what was eye-opening for me is that each of those traders, they have a different strategy, a different way to read the market, to approach the markets. And it was eye-opening to me back then because it made me understand that there is no single way of looking at the markets. There's no single way of you should do X, Y, Z, and then you are going to be successful. So that is very important. You gotta kind of find your way. Once you start looking at charts, and I think we were talking about this also like one of the other days. The most important thing, if I could go back and talk to young Dirk, I would tell myself probably, before you even consider trading anything or formulating a trading strategy, you want to understand market structure. This is always the first thing I do. I want to understand, for the time frame I'm looking at the market at the moment, are we in a ranging market or are we in a trending market? So with the example here of the Dixie, for example, by definition, and I think the standard deviation chart is a wonderful tool to kind of get an opinion about what is the market structure at the moment. We can clearly see, at least for the past 250 bars, we are in a downtrend. We are in a ranging markets. From that, I kind of want to adapt my strategies. So if I'm a swing trader who holds on to positions maybe a little bit longer, like 2 weeks, 3 weeks, I rather would like use strategies that are trend following, meaning I would probably more look for short entries. So let's say if we go to the 1x diff to the upside or even to the 2x to look for example, price action there or whatever you want to use, indicators, whatever fits your fancy to look for short trades. So if I adjust this channel now, for example, to 120, the picture becomes totally different, right? Now we are still in the trending market, but it's still a bit of an uptrend we are seeing there. Not it's almost ranging, one could argue. And what we see here at the moment is, we broke out of, we're probably trading below the 3x standard diff at the moment. So we might actually see a pullback. So I might argue now I want to look for price action that shows me that this pullback up to probably somewhere 98.5, 99 is coming soon. This is exactly what I did this morning. I saw the structure on the Dixie and thought to myself, well, now I need to go to individual pairs and see, maybe I see something that supports that. And I found this, for example, in dollar yen, where I did a long position. I found this also in cable, other way around. Yeah, dollar is the second currency there, so it could come down for this consolidation again. So you kind of have to have your structure. You form a hypothesis, and then you kind of see, like, does your hypothesis hold the test of reality when you look at different markets? Do they look the same? You always want a little bit of confluence. That's like another thing. As new traders, and I did this myself, are always looking like for this kind of holy grail situation. This one indicator that is always correct, that beautifully shows you super good signals. It's not there, You always have to see that in context. You can see this here by my indicator. Like, for example, these signals we saw here, were they worth trading? Of course not, because they appeared somewhere around the median line, the average line of a standard deviation, where you don't want to trade anything there. It's like it's a flat market. You want to wait until it goes to extremes, and then you have kind of a confluence like you had here, this is one I sadly missed, by the way, like you have down here. Now, we have to take into account, of course, that the channel also adjusts. No, it didn't probably look the same when we were back here. Might have been totally different. But you want to wait, in my opinion, for extremes, and then you the best is wait for extremes that are into the direction of the overall trend. This is not the case for the signals this morning, but then you make your life, I'm not going to say easy. There's no easy when it comes to trading, but you make your life a little bit easier. However, those chances are, of course, rarer. And that brings me to the third point: don't overtrade. Don't go onto the 1 minute chart and start, hopping in and out of positions like 100 or 200 or 500 times. There you're going to get squashed. I can promise you that. Especially if you do that manually. Might be different if you have kind of like a high frequency trading system, but I doubt that this is feasible as a retail trader nowadays, except maybe you have like $100 million lying around somewhere that you can invest into data science and hardware infrastructure, so you can shave off milli and nanoseconds by being close to execution servers at exchanges.
Yeah, definitely. And I like what you were saying about the Market Wizards books as well. They're really good.
Really good.
Yeah, Jack D. Schwager. And again, it's one of those things where you won't find exact strategies or approaches, but it's sort of more, it shows you that all the people he talks to have different strategies and approaches and ways of looking at the market, or what kind of edge they create. But it's again, it exemplifies it's more about the way of thinking, and then developing something out of that thinking, rather than trying to look up on Google or something, what's the best thing that's going to make me $1 bajillion in 10 months.
100% success rate indicator trading view for free.
Yeah, yeah. So how markets work is once something like that is found and it's known to everyone, the more people do it, the more of that edge that makes it actually make money gets squashed basically to zero, and then it won't work anymore. So generally speaking, if you can find it on the internet, it's probably no good unless somehow you found some guy who's decided to give something away on a niche forum where there's like 6 people that have read it or something like that. But that's probably not going to happen, and someone that has that is probably not going to do it if it's actually worth its salt, because they will know what they have and they won't be doing that in the first place, right? So yeah, unfortunately, that is where you have to do the work of developing your own system approach, your own thematic in going towards the market. And how you do that is by gaining all that underlying knowledge to be able to be effective in developing something like that. So that would be the way to go about it for sure. So, and yeah, from what Dirk was saying with that stuff, is definitely ideally you want to be trading some kind of extremes. You want to be getting in at good positions, not where something's kind of neutral and then you're kind of flipping the coin on the next directional move. And you might have the direction right, but the thing is there can be a lot of back and forth in between, and so you might get caught out a number of times only for it to eventually start running. So you've got a high probabilistic chance at the extremes for your trades to go right.
Exactly. For me, it's also, yeah, you might get wigged out. So in this cable short trade, for example, we still might see something like this. I get stopped out and then it hammers down back to the median, to the zero standard deviation. That's part of the game, but you gotta have your math right there also, which is in this case, this is a trading setup that has a risk reward ratio of 3.2. And so I only need to win like every third trade of this, and I'm still going to end up earning money. Actually, can go lower probably than that also. So that's the other thing that I would like to tell myself if I would be able to go back. Don't let math work against you. And math usually works against you the lower the time frame gets. So on like minute charts, or some people even trade something like 5-second charts or second charts or something like this. You're very rarely going to find trades with a very good risk reward ratio. Some people can do that, like Victor, for example, is able to do that. I'm personally not able to do that. That's why I'm not doing it. And on those lower timeframes, also the spread, the commission, so the cost for the trade is going to eat up very quickly, like 20, 30, 50% of your profit. So you need already a very high success rate if you want to scalp the markets in order to really earn money. On some days, a friend of mine who is a successful scalper, manual, by the way, but when he shows me like his track record, he says, oh, look at this. On some days, like the fees I'm paying eat 50 to 70% of my profits up. It's crazy. But still, he enjoys doing that. I wouldn't enjoy that personally. But yeah. Question for you, LJ. Can you tell what confluences you look before entering a trade? Only count technical, not fundamental. Thanks.
Yeah, sure. And just the final piece of to round up what we were talking about before is, yes, statistics and probability. That's definitely another thing that I would add to the toolbox. Get a deep understanding of that stuff, and then also incorporate that into sort of the lens of how you're thinking whenever you're developing ideas. So, yeah, as far as this, so what kind of confluences? So let's go to, let me just find a chart of something first that would have a good example, and then I'll jump over to my screen in a second. Okay. We'll use the Aussie dollar in this example just now. So this sort of recent trade through here, as we've been talking about the standard deviation channel, right? A confluence would be where if we're taking the trading conditions or the prior thing we're looking for is sort of trading the extremes. So either at the +2 or the -2, ideally, right? And if you can get to where roughly the +3 would be, then you've got a really good trade. That just gives even more confirmation. Now, when you reach those points, you're typically going to want to look for something else to confluence with the original indicator. So in this instance here, we've got the 50 moving average on the 1 hour, and we've dropped outside the 2 standard div band. That is also roughly in line with these lows, and you can see that wick has basically come to not quite fully filling the gap, but a rough gap fill. Now, since we've seen price drive back up, created a lower wick through there, new body, new hourly candle has opened up and started charging higher, that would be a decent point of confluence where filled the gap, cracked below these lows, but managed to have a candle close back above the lows of this trading range, right? Then we're also outside the 2 standard div, and we've got the 50-hour moving average right there. So that would be a set of confluence that you would put together to go, okay, it looks as though price is ready to take another lift higher. Now, from there, you can see you then measure something up as far as finding the targets, which if you want to keep using the 2 standard div or the standard deviation channel, you can see we've then ran right up through there, broken these tops, which confirms that this is going to continue running, and you look sort of roughly to the next, back into the midpoint. So you've crossed 2 standard deviations back above and into that midpoint there, which is where I took profit on that trade in particular. So yeah, that would be an idea of confluence. That's the first example I found on the charts. So I don't know if you have another example that you like to use with some other.
I gave the example just now on the Dixie and how that translated into the cable and the dollar yen trade. But it shows again, it's like everybody's looking at something else. Like the truth behind it is we are all looking for confluence. We don't just want to rely on something like a standard deviation channel. You're not going to earn money if you want to formulate a strategy like every time we are at plus 2x, I'm going short. Every time we are at minus 2x, I'm going long. You're going to lose money like this because there's more. It's just a tool to help you to find things. And as LJ just showed, it could be like a gap fill or a gap that almost got filled. And then the closing price was higher. There was a large wick to the downside. Then the next candle was a very bullish one, for example, or it aligned perfectly with some sort of moving average. For example, I think you're using the 50 moving average here as part of your setup. You got to experiment there a little bit. And I can guarantee you after a while, you'll find setups like this faster. It takes like work in the beginning. This is something we cannot take off your shoulder. Trading is work. It's a lot of work, and it can be work where you don't know if you actually get paid at the end of the day by it or if you're going to lose money. But I don't know any successful trader who's not putting a lot of work into finding setups or creating an edge. For some, it comes more natural. I think LJ, it's fair to say, is one of those people who were successful very quickly. For people like me, it took a longer time. It took a couple of years until I finally kind of found my edge and found out this is what I'm good at trading-wise. And by good, I mean like this is where I'm better at seeing edge at this particular setup than other people. But that's for me, it's the fascinating thing. It's like the markets are ever changing. It's a puzzle that you can never solve a puzzle. You can just partly fit in puzzle pieces that you kind of imagine, oh, okay, I'm seeing this picture now. And then the next day, the picture has changed again.
Yeah, exactly. So this would be kind of like you start out with standard deviation channel. We had the move down. It basically filled that gap. We got market structure to the left, which is that close that we had from the Friday. So that's also a Friday close. So that's your left side of the chart structure, which ends up being the support with the gap fill, obviously. Then you got the 50 moving average. And then candle close after dipping through to those points. We came up and closed still on the base of the higher trading recent range. and then the follow-up candle was pretty impulsively bullish, right? So that would give you a set of criteria, and you can see through those, some of them are criteria to look for an idea, as well as a combination of criteria that sort of confirm that the idea is actually progressing, right? And then you might combine it with something like you could look at like a stochastic or RSI or something just as added points. Obviously, we've talked about stochastic and RSI and stuff. They have their limitations because they're obviously very lagging, but sometimes then when you put them in combination with the set of other tools, then each incremental tool can sort of help you increase your relative probability or relative confidence level, I should say, in the probability of that trade succeeding. And sort of each confluence piece that you can kind of add roughly might increase that percentage chance of the trade coming through by another 2% or 3%, whatever. And then hence you're just trying to get a higher probability that it will play out versus not. Or sometimes, depending how you trade, you have a lower probability of success, but a very high risk to reward, like Dirk was talking about before. So depending on your kind of approach, what works mentally for you, some people feel very uncomfortable sitting in those low probability of success trades, but very high return when they do work out. And other people like to have it flipped. Right. So,
and normally I think in the beginning it's easier to go with like a strategy that has like a higher success rate. Mentally, that is easier for most beginner traders. Because normally beginner traders, they don't keep like book. You know, for me, for my particular strategy here, I have like a history of 1,000 trades. So I can kind of, pin like is what I'm seeing right now. How high is the chance for this trade to succeed? And if it not succeeds, how is it like nested within the bigger picture of 1,000 trades? Is that like an outlier, or is that, what is to be expected? And if I know, for example, that I only have, let's say, a success rate of 30%, but I know like, okay, it's normal, I lose 10 trades in a row, and then I have like 1 or 2 trades who make up that earn much more money that I lost on the last trades. It's difficult, kind of. I agree with this. It's probably something I would not recommend for a beginner, but by the end of the day, you have to ask yourself, like, what do I feel comfortable with? Comfortable is the wrong word. What can I live with? You never should feel comfortable totally trading, in my opinion. But
yeah.
Yeah,
because obviously from a sort of, I don't know, hedonic standpoint type thing, just how humans' brains work in terms of, reward center and that kind of thing. Yeah, obviously having the trades coming through more regularly is going to help with your motivation, your all that kind of stuff, which will help you develop your trading. But yeah, that's going to be one of those self-awareness things that you sort of pick up on. As far as this, so which timeframes are best to use the standard deviation indicator on for trend identification? Also, what is the ideal starting point for starting the indicator, like any reference points? So first of all, as far as settings I use is the prior 120 bars. And I do that on a close basis. So if you guys look up STD, DEV, CHN, that's the indicator name on TradingView, you'll be able to find it. And there are plenty of other things that you can play around with. It also, you can add it to other, use the data from other indicators that you have on the chart, right? So this is the Kalman trend levels, which you can connect it to that. And you guys can play around with this kind of thing, but obviously build the logic as to why you would want to use that or not, rather than just sort of doing random stuff. But yeah, so I use the past 120 bars typically. That's my preferred. Obviously, Dirk was using the past 250 before. It's going to depend on your approach, your time frame for the trade, that sort of thing. So as far as the actual time frame to use it on, the lovely thing about this is you can use it across the board generally. So you can see right here, we're looking at a 5 minute, right? So we've encapsulated price nicely through there, capturing the bottoms. That's an extent beyond the channel. So we'd look to kind of short that. And then hence the confluence piece would be, this is up by the prior relative highs we had after Trump talking about the dollar last night. this was the spike for the Aussie from the inflation data today from CPI. And then we had, that final sort of charge up there and then came back into the midpoint, down to the -2, and now we're taking another run. So that's a 5-minute. If we go up to the 15, you can see as well, going very nicely through there. Go up to the 1 hour, similar deal. And then going on to the 4 hour. So on a longer time frame, like we're saying, this dollar move is probably a bit worked through. As you can see on these larger time frames, we are starting to press outside those levels. On the lower time frame, you'll be able to find more in and out, more active trades. And the good thing to always compare is that, say, if you look at the hour, we're still very much in expectation on the 1 hourly sort of set. Meanwhile, if you go to the 15 or down to the 5, you would see that before we did shoot outside of it. Now, to understand if there's any chance of us actually doing that to begin with, so you didn't get caught out, you might go like, oh, okay, that was the extent of where price should go. Yes, price can definitely move out. How do you try to confirm that is going from like the 5-minute to the 1 hour, and you can see that very much a move back into 70-20 should be expected. So that's only the +1 standard deviation on an hourly. So
most ideal is if they all align somehow. No, when if that is the case, I think then you can use like the lower time frame to kind of time your entry pretty good. If you see like everything points upwards, but the 5 minutes is at the -2 standard deviation, that together with of course more confluence, then could be a pretty good point where to, for example, enter a long position.
Yeah, that's a good point. So not just confluence as far as indicators or other tools that you're using to measure price action or whatever it might be, but also using confluence across time frames is very, very effective. So yeah, that's definitely a good point there too.
And like one thing I also suggest, and I have to go away 5 minutes after that very quickly, is like don't try to do that like on 10 different pairs. Or 100 different pairs or something like this. I'm exaggerating now. Maybe concentrate on 1 or 2 because it kind of takes time until you get the gist of it. Take it easy. Otherwise, you're going to make your life too difficult. I'm going to be back in 5 minutes.
Yeah, that's right. No worries. Yeah, definitely. Especially if you're just starting out, I would say focus on 1 or 2 pairs and just really like nail down understanding and trading that pair. I would even still say that if you've been trading for a while, that's what most traders do. Often sort of start small, start expanding the assets they look at, and then often people contract again and then just have a couple of their favorites. Now, obviously, how you find your favorites, you will have to jump around a bit eventually. Some people really like trading the DAX. Other people really like gold. Other people like the majors. Some people really love the yen crosses. And you'll find that out by exploring. Matza saying, thanks LJ, that really helped. I'm relatively new to trading and hopping one strategy to another. So I'm going to backtest this standard deviation channel with the EMA. Yeah, brilliant, man. Test it with the EMA. I know some of the guys here prefer using an EMA. I generally have always used simple moving averages, but I normally have some kind of EMA sort of baked into like a Keltner channel or something else as well. I often look at. EMA is obviously going to keep up a bit faster with recent price action. So, guys, a final question. Do you guys take in consideration session highs and lows as possible manipulation and reversal points? I've read a little about SMC. Would love to hear your opinion about it. So, SMC. Look, I can't personally recommend SMC. Obviously, it's a very hot internet trading topic. A lot of people love it. Some of the concepts in these things are fair, and of some value, I will say. But generally speaking, they've been regurgitated from old traditional trading approaches or concepts, or the sort of bread and butter 101 type stuff, and just sort of rebranded as a bit of a marketing kind of push and ploy. And people have their other agendas of selling courses and all this kind of thing, right? So it's things where you talk about like the language around it, like manipulation. There's no actual manipulation. It's just trading. But if we're talking about just highs and lows, and where you've met those certain relative extremes within the recent cluster of price action for that day, or the past 2 hours, or the current trading session or something, then yeah, definitely you want to take those into account. So similarly through here, you go, we've got these tops, right? We're going to use my rough drawing with the Gore pencil here. Yeah, so you definitely be taking those tops into account, right? It's all it's saying is really it's resistance, right? So the same thing through here. You've got this kind of ascending price action through here, basically just indicating that we have momentum to the upside is still intact and overall increasing, since we've got higher lows, higher lows, higher lows. That's the kind of thing you're looking at. And then you might go, okay, this was during Asian low at the beginning, or towards sort of the first 2 hours of Asia. That would have been my time. Yeah, so it's midday. So basically mid Asia. This is towards the end of Asia, just before London. This is basically London high through there, and we got the low through here, and now we're taking another attempt at the highs. So yeah, you do want to take those levels into context. Obviously, that's just sort of just general market structure of the current trading range. So if how they communicate, whether it's SMC, ICT, whatever, how they communicate makes sense to you, and you're able to deploy it into the market and use it, then fair enough. But just take a bit of a grain of salt with some of that stuff, because there's a lot of it that is just not really correct at all, frankly. Without getting into a big spiel about this, we need Johnson here, really. But yeah, a bunch of the concepts are valid. There's just a bunch that are not as well, and it becomes really difficult when people are starting to learn out as well how a lot of it is packaged, that if what you're doing didn't work, it's because you didn't follow something correct. Kind of, that's the thing where it tries to put this weird onus or blame on the trader, rather than the thing maybe potentially just being incorrect to begin with, and it gets people trapped in this loop of buying courses and watching the YouTube videos and all that kind of stuff. So I would say, if you find some kind of concepts, do deeper research on the derivatives of where those ideas originally came from. And then obviously, key portion is always to backtest this rigorously, and potentially not just a backtest through a single time period of, say you take the past data history, but actually run things through more rigorous tests with like Monte Carlo type simulations and stuff under different past histories and regimes. When do you exit, stop loss, and take profit? So that's going to depend on, risk management is one. It's also going to depend on what the reason you took the trade was in the first place, right? So typically you're going to have that sort of mapped out before you enter the trade, right? You shouldn't be figuring that out on the fly when you've already entered a trade. So generally speaking, as like a across the board thing is going to be, say we took the trade through here, you'd be looking for some kind of support, and that would be roughly where your stop's going to be, just a bit further than that, because the idea would be, okay, if price continues moving, we break that support, the trade is now probably invalid. And as far as a take profit, you'd be looking for, again, some kind of resistance, right? So you might look at the tops through here, right? And then that would be where you probably look to take profit. So you're looking for some kind of causal reason that would either validate or invalidate the trade. And similarly, when you're looking to take profit in this instance, another way I often try to think about it is, where is the place that I might potentially look to short? So if I was looking to take a short, it would probably be up here by the highs somewhere. Reason being, these are recent tops. We've had a good drive higher for some time. If that's where I'd potentially look to short, that's probably where I should potentially look to take profit on a long trade as well. Because essentially, if you're long and you're now closing the trade, it's theoretically the same as going short, right? Because you're now saying I'm out and exiting the trade, right?
Yeah, that's actually a nice thing to go about it. Like, have your take profit where the next time you might consider taking a short. Yeah, that's I like that one. Yeah, I like that one.
Yeah, because if you're long Aussie dollar and you're now taking profit on it, you're essentially saying I don't believe Aussie dollar will continue high here. Therefore, it's kind of technically like saying I want to go long the US dollar.
Yeah.
Yeah. So.
Question from Craig Maputi. What do you say about Fibonacci and support and resistance and trend line trading? I mean, it's kind of all the same. It's all about support and resistance. I particularly quite like to add sometimes Fibonacci to the mix, and to kind of find also like areas to where could be a potential trade profit zone. Now, I use Renko charts very often simply because I want to get rid of the noise in the markets, but this applies to any kind of chart you choose. So what I typically would do is I look at the last extremes. So where was the last extreme to the downside? We're in an uptrend right now. Connect that to the last high we made. And then I kind of want to look, how does that whole picture align here? So typically what you'll see, I always want to be careful with saying something like typically when it comes to trading, but often, which is goes into the same direction as wording. So you might see, for example, that price in an uptrend or in a downtrend, when it starts reversing, likes to reverse to, for example, the 0.382 Fibonacci zone. And if this is still in line, for example, with being somewhere around the median deviation channel, or even better above that, that could be for me then a potential zone where I want to place my take profit. And you can see this is roundabout also where my take profit for this GBP US dollar short is. So it's all about finding things that work for you, with the basic truth behind that. Is that something that can add to your confluence? Or, for example, in this case, if I would have seen now that the 0.382 Fibonacci retracement is already somewhere down here, I probably wouldn't have taken actually that trade, because there's a high chance we would have deflected, since we're still in an uptrend, that price only goes maybe down to the +1 standard diff X or to the median line of a deviation channel and then bounces up again. In this case, probably still would have made sense, because the risk reward is very high on this trade. But it's hard to describe actually. You kind of have to find like what from your eye makes sense. Does that, when you apply a trend line, when you apply support and resistance, when you apply a Fibonacci channel, does it add to your hypothesis, or does it maybe disprove your hypothesis? And if the latter is true, maybe then the trade actually is not a good idea. You want to kind of create a scenario where all stars align. You don't want to risk your money on mediocre trades, right? And you might as well buy lottery tickets then.
Yeah, exactly. I also think, the trend lines, Fibonacci stuff, etc. Often for many people, it's quite controversial.
It is absolutely controversial. I agree, especially Fibonacci.
That it's rubbish. It's just a bunch of heebie-jeebie voodoo, whatever stuff. It depends what the logic behind why you're applying it. Kind of like what Dirk was just saying. Does this, in what way does it assist your thesis as to why you're taking the trade, right? So if you're just planting random lines on the chart and going, price is just not going to go there because there's a line or something, then yeah, you can argue that that's not really a well-constructed critical thinking type of idea, right? But if you're looking at, okay, clearly, this area would be resistance. You've seen clear willingness to sell each time we've approached this zone. You've seen a clear willingness to buy up from here. And the logic being, okay, higher lows all the way through. That means participants are willing to continue to buy the asset each time it comes lower, becomes cheaper for it to go higher. Now you're starting to construct more reasoning into that thesis. And you could view, say if you have like this kind of triangle, kind of wedge type thing going on here, you can view it as like, I always view this as kind of like a physics idea. Let's hide the standard deviation chain right now, as like velocity of price. So you're kind of measuring the momentum of the move and the volume and volatility. And you can see then once, we've had very aggressive volatility, momentum to the upside, we've now started to stall out, and that vector is now compressing. Right? And then you start to view it as a spring, and then you either break out or break above.
You can, if you're unsure about like manually drawing or identifying something like this, like a good indicator for identifying these compression zones, in my opinion, are the Bollinger Bands. When you see it when like squeezing together, that's an expression of like compressed volatility. And like LJ just so nicely said, it's a spring, that's very compressed. It's going to jump again into its natural state. What we don't know, of course, is in the beginning, is this going to be to the upside or to the downside? But what you do know is there is something coming. Like
exactly. Yeah. And so Bollinger Bands are kind of like the standard deviation channel that we talk about a little bit, but just based on a different sort of calculation. So your standard Bollinger Bands will have a 20 simple moving average going through. Basically what you'll see is like the midpoint here. And then the top band is 2 standard divs above and 2 standard divs below. The difficulty with them is obviously because the 20 moving average is quite low time frame. You would think this might be the top, and then it kind of just rides the thing the whole way, right? So that's the sort of limitation. You can play with deeper settings, that kind of thing, but that's part of the reason why.
You have a good example there actually on the chart where like they compressed it a little bit, and then you had this large green candle with a breakout, like right in the middle of your chart there.
This one or this one?
A little bit, no, a little bit to the right. That one where you're now pointing at. You saw like a bit of compression in the Bollinger Bands before, and then you saw the breakout.
Yeah. So often, one of the good things is to combine it with a standard deviation channel, and then you would see that, we're compressing through there, but you could easily see, price up through the 2 standard div of the channel is very realistic, right? And then that helps you not get caught out thinking that the top of the Bolly Bands is going to be the limit of price.
And it helps you not to FOMO into the markets also, in my opinion.
Yeah. But that's another confluence point as well. Once they do expand and you see price, the edge of the Bolly Band and the edge of the standard deviation channel, where you see them where they're sort of intersecting, that could be a good confluence piece to, take a trade, right? So with that base through there, with this running outside up through here, there you go.
It's interesting, no? It's like we come from different direction, but by the end of the day, we are always looking for confluence, and everybody does it in a different way. Everything comes always down to support and resistance, in my opinion.
Yeah, essentially, like the bulk standard, if you use nothing at all, literally just support and resistance market structure to the left of the chart is going to be your best bread and butter. It's not exactly a good example because we're in running up for quite some time. But yeah, sort of these left of the chart shoulder levels will be your best, bread and butter if you knew nothing else about anything at the end of the day. So is this similar to VWAP as this uses standard deviation? Well, VWAP's a little bit, so VWAP's going to be, first of all, VWAP is going to be very different if you're running it on like stocks or anything that goes through a centralized exchange or like futures or something versus say like tick volume from like FX, from currencies, right? It's not going to be perfect expression of actual volume going through the market being changing hands. VWAP is very useful, however, though. It's essentially just showing where the average price of price activity between participants is, right? So I don't know if I have a good VWAP indicator on here to...
I don't. Honestly speaking, never use it.
I have a personal one on my C Trader that I use that's really, really good. Let's see if this is... that's
probably, but you don't have the volume, no? That's the problem.
Yeah, actually, yeah, it won't have the tick volume through here. Yeah, that's why it's not working. So yeah, probably can't show it to you guys on here, but yeah, VWAP is sort of, again, it's almost kind of like the standard deviation channel in some sense, that it's giving you that kind of neutral point, and price will tend to gravitate back to that neutral exchange level. So a good way to think about it is, say you're looking on whatever your local country's car sales website is, and I don't know, Toyotas are selling for $10,000. Then there's a couple that sell for $14,000 or $13,000. There's some that sell for $6,000 or $7,000. There's probably only a couple of them outside of that range, and there might be someone else that looks at the price going, oh, that one went for 14, I'm going to sell it for 11 or 12. But over time, the price will tend to average back to that 10K. So you can't expect car sales to always stick around there. And that's basically the same thing with markets.
And I mean, you can make your life very simple, in my opinion, also. Like if you use, for example, the standard deviation or VWAP or whatever, ATR bands, Bollinger, if you combine that, for example, with moving average. I have an example here from the crypto markets, Solana, which I think showcases is very good. So I like to use the 200 exponential moving average. Again, I'm using Renko boxes here, but you can do the same with candlesticks. Why do I use Renko boxes? Because I like to take out the noise and just concentrate on what is the current trend. Current trend for Solana, as we can see very clearly, is up. And now look at what happened when we came down to the -2 standard deviation, and we had the 200 exponential moving average here. It's like it always bounced off there. Not always, of course, but this is like, for example, for myself, what a good conference looks like. I have like something that is like a measurement of average, also exponential measurement of average for the last 200 boxes, and I have the -2 standard deviation. Just based on this sadly are trades I'm not looking at, because I usually don't like to trade Solana very much, because it tends to be very manipulated sometimes. But if I would, like in real life trading right now, see something like this would be a buy for me, because I can very easy then, let me get the right tool here, do something like this, decide like, okay, I'm going to put my stop loss down there, and just if it reaches the 0 standard deviation again, I have a risk reward ratio already of 1.5. Math works in my well, execute it. And then just let it run. Either it hits your stop loss or it hits your take profit. Don't like close your trade prematurely. You've done your math and now it's on the market is going to decide whether it's going to reward you or whether it's going to not reward you. It's like don't make things too complicated, especially in the beginning. Don't add like a million indicators to the mix and wait for everything to align. You're probably going to just get confused.
Yeah, that's the other good point with the what now I just blanked on the word. Confluence that we're
Welcome
talking
to
about
my life.
yeah. Don't be stuck there like a deer in headlights, waiting for too many confluences to all come together perfectly in some neat packaged little thing with a ribbon on it. Because sometimes you will have to just sort of make a bit of a decision to pull the trigger, because markets are never going to give you the exact perfect expression. It's the same way if you try and code a trading algorithm, you're going to have to code into it a degree of variation, because the market's never going to print the exact specific criteria that you're giving it. So with this, as far as what happens when the candle goes outside the standard deviation lines, basically how that works, what we're talking about is, so this is your standard bell curve, if you guys are familiar with that. So basically the two standard div, this is this funny looking symbol here is basically just 2 sigma, right? So that's the 2 standard div. Now, hence you can see 95% of all price will tend to be encapsulated within the 2 standard deviations. And then this is the 3rd standard div, which will tend to encapsulate 99.7% of all activity. So hence why when we're looking at this, we can expect that price is going to be encapsulated within that range. This is very small. But yeah, so there's a very small, it's very, very rare that price goes outside of that. So the idea is basically on average, price will tend to come back into the center point or else travel to the other end of the bell curve, of the distribution, I should say. Now, as we've talked about before with standard distribution on good old bell curve, price can move outside of it because it only encapsulates the prior data. So sometimes if there's some new kind of piece of data, new input into the market, some kind of catalyst, it can push price outside of that because something new has been introduced into the data set that was missing before. And that's like some of the times where you do see us pop out into that 3rd standard div. That's very rare. We had a situation last week in the Japanese bond market where we hit a 6 standard deviation move over 2 days, which is incredibly rare. So the idea is that, especially trading day to day, you're going to be pretty safe expecting that price action stays within that. If you're trading something over a very long time period like stocks or something, you're going to have to account for much larger moves that are outside the calculation. And if you're a student of market history with long-term capital management or anything like that, basically these distributions tend to have a long tail, which tends to always be to the downside. So often you've got asymmetric risk to the downside and outside exposure to negative returns rather than positive. But that's going to tend to be on a much longer time frame than what we're trading here. So that's why it's very effective, very powerful, and you can rely on it quite heavily with a good amount of confidence on that lower time frame type aspect.
This tail is also the reason why we see implied volatility going up when markets go down, because the moves to the downside are usually immediate and more severe than to the upside.
Yeah. Because obviously everyone wants to be out when bad stuff is going on, and people are hesitant when good stuff is going on, whether they should join the trade and then eventually get FOMO, and then people join and then FOMO gets too much and then you get the inverse. But that happens less often.
That kind of looks nice here on euro dollar.
Yeah. I was thinking about this because I know we're talking about dollars sort of turn around, right? and this is what I was saying, where I think there might be maybe one final gasp in it, because I don't feel like we should really be running down to 119.20 just yet, unless somehow over this next hour we get a firm break of these lows through here, of this upper trading range. But I would tend to lean on another run higher before a collapse.
Collapse.
Well, collapse. I mean, if we think about, I guess the pivot is
I
sizable,
get it.
right? But it's not a collapse, I guess. A
Somebody
retrace.
liked my headphones. They are from Sennheiser, and they are very comfy, very nice, very good sound quality. I used to have like all those cheapo Logitech headphones, but not anymore. But LJ is using AirPods probably, no?
Yeah.
Maybe I should start that too. But actually, I have such a good desktop PC here, like really a high-end machine. What it doesn't have is Bluetooth. So
Oh, really?
I forgot to to integrate that when I built it.
I made sure, because I did that on my last PC. I forgot Bluetooth, and I also forgot a wireless internet card. And I was like,
Oh yeah, okay.
trying to connect. I was like, oh, I didn't put a wireless card in the PC.
I have a wireless, but I have connected it by cable here because it's just more reliable.
Same, yeah. But yeah, when you want it there and it's not there, it's pretty terrible.
Somebody screaming, can you please look at gold? We did already, but for what it's worth, again. So gold, I said earlier, it's sadly really a trade I didn't trade because I didn't see really the confluence, honestly speaking. I said I don't want to be caught in a short trade at the moment at gold, but worked so far out quite beautifully. I would like look at the region here, maybe 5,225 to 5,200 today. If you are looking to buy again, I could imagine that we are going to, prior to Jerome Powell starting talking in a couple of hours, that we're going to eventually see prices around that area. I hope your question and you repeating that question doesn't mean that you are caught currently in a gold long trade where you FOMO'd in at the top price today.
Yeah, gold. I mean, I'm not super comfortable going long at the minute. I'd prefer, personally, I will say, you guys can do as you will. At this point, looking for shorting, like fading another move higher. Basically on that same basis of the similar deal with the other majors, dollar getting one more sell off and then basically reversing things. I think gold and silver are kind of looking same with silver, since I mean we failed to get to those tops, even though gold obviously broke out pretty significantly. So yeah, I'm personally probably just going to be waiting for price action, probably a bit closer to New York or heading towards Jerome Powell or after Jerome Powell speaks. At this point, just given where we are in gold. Again, we're in that kind of, if we look at this, we're kind of in like a neutrally kind of zone, right? I don't really like it personally myself.
Yeah, it's not like a trade idea that jumps into your face and screaming, you have to take this trade. I agree.
Yeah, I would have liked, I wouldn't have minded like buying off of here. As far as the 50 moving average, this sort of cluster that we drove up from through middle of Asia. But yeah, where price currently is, even with euro, I would somewhat like to buy this, but I want to see if this is actually just going to completely crumble or not. Because if that's the case, then I'd potentially take a long from there, from the 200 on the 15-minute. But yeah, I feel like I'm in a little bit of a wait mode.
What are Kalman trend levels?
I think it means the Kalman.
Kalman. Oh, okay. The one from Big Beluga.
Yeah.
I still haven't looked into this. Like when exactly?
Yeah. So they're kind of like a improved version of moving averages a little bit. So here, let me see if I can bring this up for you guys. Let's see if we got this. So here we go. Just quick Google for you guys. Kalman filter is an advanced adapted technical indicator that acts as a low lag noise reducing alternative to moving averages, highlighting trends and potential reversals. It's a two-step predictive and correction to estimate the true underlying price trend rather than just averaging price data. Often used for trend following, it's effective at identifying support resistance zones, trend shifts in various markets, including FX, crypto, whatever. That's just your called AI summary there. But basically, Kalman calculations, let's say, they're also used for identifying the relative position of something with slightly skewed or obscured data, so lack of data. So it's also the same thing that your GPS uses when it doesn't have perfect location data to predict where you actually are. That's why sometimes you guys will see that you go on your phone and it can tell exactly where you are in the building. You probably don't have perfect signal or whatever. And it was previously used in the past when we were launching rockets into space back in the 60s, when obviously we didn't have the sophisticated technology to get perfect telemetry. So they had to sit here on Earth and roughly guesstimate and calculate where the spaceship actually was in real time with imperfect information. So without going into a big math lesson on it, that's kind of how it works. So it takes certain data points to discover the true sort of underlying position of something in a noisy and random, imperfect information system, which describes markets as well. So the same way that you would use it for GPS or telemetry for spaceships and stuff.
And if you want to translate that to the markets, I think the reason is here that you have a moving average still, or averaging price, but in a less laggy way than normal moving averages are doing that. I myself, I haven't experimented with it, honestly speaking. It always looks like visually very appealing when applying it to the charts, but most of the big beluga tools do that. They're very good in making the indicators visually very appealing. But for sure, I mean, that can be also something that you take as Confluence, for example. Why not?
Yeah. But yeah, so it's kind of like an improved moving averages indicator, right? Which will give you a good idea of the trend. As you can see with this one from Big Beluga on TradingView, you guys can just you literally just sort of click it and gives you these sort of support resistance levels as well. Obviously, green means the uptrend is still intact. Once it turns gray, we're now in kind of a neutral, the trend is in question type zone. And then red is obviously we're now on average going into a drawdown.
I mean,
it also does give these kind of relative trade indicator, ideas. Take them with a grain of salt, though. Don't just
But I could imagine something like, in a visual way to quickly identify, we are trading, for example, at the -2 standard deviation, and the candle color of the Kalman indicator is gray, for example, and then turns green. That could be a sign of Confluence. I mean, why not? I haven't tested that yet, so I'm just, talking from the top of my head here. But yeah, why not? Could probably work. It's like, but something. Yeah, I mean, you see that actually there. No, you had before the last trend, the gray candles that formed at the -2 standard deviation, a little bit to the left, exactly there, and then you had this large green candle to the upside. So that's a sign of Confluence, in my opinion. Why not?
Yeah.
Does that work every time? Probably not. But what does?
Yeah. Not every time, but yeah, when you combine it with confluence like that, and essentially it'll start turning gray when it's showing that the average price of the candles is sort of below the prior trading range, right? The recent relative trading range that we've had. So same deal here. You can see these candles are starting to close below that higher basket there.
I mean, you could argue that, you know, it's like the market went from trending into ranging or into compression mode again.
And so generally speaking, the uptrend will still be valid until you sort of cross below that lower band just here, right? And then you can see this is also coming up with this little red guy here is the 100 moving average, just there, simple moving average. See if there's some examples over here. So you see here, this is where we've had that crossover. So downtrend intact until prices come above there. We're in neutral. Prices then pulled back. This is flipped to green. Prices then held above that. Let's get rid of this. It's distracting. Held above that now. We've now got that flip to green, and prices starting to build up from there. So yeah, it's a good indicator overall.
It's the Holy Grail.
Holy Grail. Sorry, I'm just catching up with some of the prior chats.
I've been waiting for this one.
Yeah, we had some stuff with that before when you left.
Oh yeah,
Yeah,
damn, I missed it.
Yeah. Go on, you can give your opinions and thoughts.
I bet I don't.
Yeah, gosh. LJ and Dirk, can you show us some live scalping, take some trades on TradingView, paper trading, and show us some stuff so we can learn where to put TP, stop loss, and buy and sell? Yeah, sure, definitely. Maybe, I mean, we're about to finish up here, I think, for today. But in the future, we can definitely do some live trading, even some scalping stuff. I sort of scalp infrequently, not all the time. It's sort of just when stuff presents itself, not every single day. But yeah, we could definitely do something like that. I think, I mean, you'll have Rich and Will jumping in soon, which I'll probably do some active stuff with that if you want. Give them a shout. As far as this, Pra, I saw this before. So planning to get an account. Which one should I get? I've traded in the past on a 2.5K and 5K account. Should I go for a 10 or 25? With that, I would say probably keep trading your 2.5 or 5. And then once you've made some profits from that, got some payout, use the payout to get a larger account. Sort of scale it with that. So if your trading's working and going well, that's probably the way I would do it. Unless somehow you've got some discretionary spending, some excess money that you can afford to pay for an account, and you're confident in your trading already, then potentially you could go for the larger account. But my best recommendation would be to use the smaller accounts to make some profits and then roll those profits into getting larger account.
Yeah, the only thing, of course, can be like, trading on a 2.5 or 5K account might seem on the surface like more boring, because the actual winnings you see are, of course, only a quarter of a 10K account and less than on the 25K account. But I agree with LJ, if you're on a budget, start with a 2.5K account, see, is like my strategy actually working? Am I able to do that? And either when you scale up automatically with that account, or if you cannot wait, reinvest the winnings into buying, for example, a 25K account, or maybe even a 100K bootcamp account or whatever. Totally ledgered like this, yeah.
Yeah, because it's going to depend on your budget, what part of the world you're in, all that kind of thing. But yeah, obviously as well, the accounts do scale, so you've got that option also, of course. Mason saying, how do you connect AirPods to the PC? Just through Bluetooth. You should be able to search it. Just go to like other other Bluetooth devices, and sort of just hold the case open. It should discover it. So, why did this jump in gold happen? It's been happening for a while. It's all down to geopolitics.
Which
Very much Trump as well. Yeah, which one? Last night, a large portion of it was because of the Trump comments around the dollar. We've had the geopolitics, Greenland, all of last year, the trade tariffs, China kicking off. Pick your day. Different day, a different piece of action. But it's all coalescing into the same move. Last week we had the bond market popping off. So I think we got Rich and Will in the background. So let us know when you guys want to pop in. How we doing?
Good, William.
Good, and you guys?
Yo, what is good, people? How are we doing?
Yo.
Very good. 2 hours passed in a breeze.
It did.
Isn't it?
That is what we like to hear.
Lucky, this morning I was a bit afraid after yesterday evening's move. I thought, oh, come on, we're going to have very boring markets this morning. But it's decent. There were good chances, in my opinion. How about you guys?
It's still good.
Yeah, I agree. I think there's still some money to be made somewhere on some of the market, but I think it's pretty much a waiting game at the moment.
Yeah.
I think a lot of people either got really scared off by gold last night, or they just got made instant millionaires. Somebody made either a bunch of money or decided never to trade gold again.
Which side were you on?
Yeah.
On the fence-sitting duck side.
Yeah.
My one leg was hanging on the one side and my other leg was hanging on the other side. I did not do either. I didn't trade it. I didn't look at it. I had some other things that I needed to do first.
That was fair. We had some good chats today, though, Dirk. I think
I agree.
It was really good.
Yeah, thank you to you guys who have been with us here today, the audience. Some great questions we got also from the audience. Some really people thriving to understand how to approach the markets and what not the best way, but a possible way is to start your trading career. Really appreciate it and continue like this to siphon as much knowledge as you can also of Richard and William. And for me, I think there's nothing left to say other than see you again next Monday morning. Take care, guys. Bye-bye.
Fantastic. See you later, bro. Have a great one, man.
I was about to say, steal to your heart's content from us.
Yeah, something like that. You do whatever you need to do, my friend, to get the information that you feel that you need.
Well, all right, guys, I will have to say bye as well. I got to jump down to the shops before they close.
Nice.
I will see you guys tomorrow. Today is Wednesday, isn't it? Yeah, it is.
Yes.
It is.
I'm losing track of the days. Yeah, it's Fed Day. Of course,
it's Fed
Day,
which is weird.
It is weird. It's been very. We were saying before, it's been very in the background. Hey, it's not really been topic of the market recently. So, but yeah, great chat today, guys. Hope you guys got some value from that. Don't forget to like the stream as well. Subscribe if you haven't. We're almost at 100K. So, with that said, I'll see you guys tomorrow. Ciao for now.
Ciao for now. See you later, Doc Lock.
See you, Craig.
What's up? What's up?
What is good? What is good? How are you doing?
How are you? How have you been? I haven't spoken to you in a minute,
mate. I've had the holiday from hell. If anyone's seen Come Fly With Me, they'll get that reference. But bro, like, oh man, I've had a day. I've had a day I would quite like to forget pretty soon. So yeah, it's just been super stressful. A lot of stuff going on at the moment. Moving parts regarding my building, my Wi-Fi. I'm actually now using my data. So there's a lot of complications going on there. So I'm going to see how that goes. But I mean, the stream at the moment is loading super fast. So I don't know, man. There's a lot going on. So, but other than that, I'm good. Other than that, it was a cold day today, and I wore my t-shirt and I went out and I was bloody cold, and I was like, just today, man, it's just, and it's the day that I've decided to like sort my fasting out. So I've cut back down to 1 meal a day, and I haven't eaten yet. So I'm bloody hungry.
Dude, how have you not eaten? It is probably like what, 8 o'clock there by you now?
Nearly. It's 25 to 8.
How have you not eaten today, mate?
I don't know. So it's also my first coffee as well, which is. Oh no, that's a lie. My partner forced me to try a matcha chocolate peanut. So that's all I've eaten today. That's what I've eaten today.
Chocolate peanut.
It was like, bro, I'm gonna take some home to the UK as well, dude. It was incredible. It was like, think about, I don't know, how could you describe it? Like a Ferrero Rocher, but with like a matcha outside. It was really good.
I think you need to start taking better care of yourself, my friend. Start eating properly.
That's the whole point. That is the whole thing of what I'm doing. I'm going back into my 1 day fasting. I'm not gonna do so like every quarter, me and my brother would do like a 72-hour fast. I'm not gonna do that while I'm in Hong Kong. I don't think, just because. No, I'm gonna leave it there for the second. I don't think I'm gonna do that in Hong Kong. However, I don't know. Maybe I will, because I'm enjoying the food too much, you know. And I know for a fact that as soon as my partner starts cooking in the apartment, I'm not going to be able to survive a fast, because
you probably are going to suffer.
No, it's just not going to happen. Like, her food is incredible. Honestly, it's to die for. I got very lucky with a girl who can cook so well. So I just decided, you know what, I'm going to do a 1 meal a day fast instead of just a straight up fast. And just see how I get on with that. You know, I'm not doing as much exercise as I was in the UK, so I feel like my body's going to be able to survive it a little bit easier. However, the minute I go back to gym in Hong Kong, then that fast is going to have to come to a very sharp end. Otherwise, I'm just going to be taking too much resources from my body.
Fair. I was on a little bit of a diet, not last week, the week before. But that got cut short because of the electricity issues that we had.
So you have to eat all the fridge.
Yeah, I couldn't stock anything into the fridge. So last week, I did way too much takeaway. I tried to do the healthiest option for takeaway that I could, but still, regardless, my diet had taken a bit of a dip. So yeah, this week back again to try and make sure that I'm eating healthily again.
It's hard when you got like really convenient food. Like we're walking past street food in Hong Kong, and it all smells amazing. And so my first week here, it was just nothing but eating street food and just eating all sorts of great food. And the smells would be there as well. So like now that I'm a bit like you, sort my diet out, cutting down a little bit, sort my eating out, I'm walking past the street food. I'm like, oh my God, this is hard. Like, I just don't want to leave my apartment.
The following a diet to me is never a problem. I don't really struggle to.
Do you not? Oh, bro, I do.
No, yeah, I don't. How? I don't struggle at all. If anything, I struggle to eat enough.
Do you? Man, I'm not.
Yeah, I have an app that I use. That's like an all-encompassing. It's exercise. It's like daily routine, all of that kind of like stuff. One of the portions of it is also like let's call it calorie counting, even though it's not just calories, but it's logging your breakfast, lunch, dinner, snacks, all of that kind of like stuff, just to give you like a baseline to see what it is that you do during a day. And according to what I'm supposed to be on for, you know, my age, my height, my current weight, current BMI, all of that kind of like stuff, I'm supposed to be eating like roughly 2,000 calories a month. Not a month, a day. I'm not, dude, I don't even remotely come close to that. I'm like 1,600, maybe 1,700 calories. And then I'm fine. Like I was just like, okay, I've had enough. I've eaten properly. I'm good. I don't want to eat anymore. And then the app keeps telling me that I'm, you know, I'm not reaching my goal.
You're malnourishing yourself, like.
What do you want me to do? I don't want to eat cookies and stuff like that. Thank you very much.
Yeah, thing is though, like like you said, you know, like calorie counting is all good until you work out that you're now eating super healthy to the point where the calories that you're intaking are actually filling you up, and like they're good calories, they're not empty calories. So you can't consume like 2, 3, 4,000 calories, because 2 to 3 meals a day. Like I've never had 3 full meals a day, but 2 to 3 full meals a day, you can quite easily consume 1,500 to 2,000 calories and be like, "Whoa, I'm stuffed." You know, because you're not eating like McDonald's burgers, crisps, chocolate, and then consuming 4,000 calories and still being like really hungry after.
Yeah, it's just I always thought that maybe I was somebody that overate. Nope. I don't overeat at all. So I have statistical evidence on my phone to prove to myself that I'm not somebody that overeats. So that's good.
Yeah.
Anyway,
My
bro, I want to ask you.
statistics is around my belt line.
Yeah, have you been in any trades today as yet?
No, not yet. Like I said a little bit earlier, it's just I've had a hell of a day, so my trading has just taken a backseat. Hoping to get in something a little bit later on today. I know it's Fed day today, like LJ was just saying. I want to check the news real quick. Like I said, I've had no time to do anything, so I want to check the news. I want to check the charts, see if there's any opportunities for me to get in on. If there is, I'm going to execute with precision, very much like I have done recently. But at the moment, no, there's not a lot going on for me. There's just so much volatility and ambiguity and fundamental moves that I'm just all over the place with the market.
I'm gonna try and take some live trades today. My live account is due. Like I said, I didn't get an opportunity to trade it the majority of last week. So I just want to make sure that I don't forget about it, you know, and then you potentially get
I'll remind you every morning or every morning. I'll be like, Rich, live trade now.
Yeah, live trade today, quickly.
Yeah, today at some point. Have you seen anything in the markets at all this morning?
First, let's quickly have a look at news for today. So it's Wednesday today, the 28th of January. Wow, January flew. Like January was so quick for me. It's crazy. Anyway, we have on the Canadian side of things, we have the monetary policy report as well as the rate statement, as well as the overnight rate. So this is going to be at 16:45 UTC plus 2. So that is 14:45 UK time. So for everybody that is trading Canadian dollar or the Canadian assets, do take note of this time. This is going to be a market mover for the Canadian dollar. So if you have a high stakes account and you are trading Canadian dollar as one of your assets, please remember the 2-minute before and 2-minute after red folder events rule that we have. Then we have at 9 p.m., so that's 7 p.m. UK time, we have the federal fund rate. So that's a interesting one. We're on 3.75. The expectation is that it's 3.75 according to this, but I have a sneaking suspicion we might drop it. I have a sneaking suspicion that I don't know. I don't know why. I have no evidence to support my claim.
You have zero data backing it. It's just
I have no data backing it. So
feel it.
Yeah, it is not. I'm not saying it's going to happen. I have a sneaking suspicion that something's going to happen with this meeting. FOMC statement as well as the press conference as well. Like LJ said, it's been on the back burner today. It's not really. It wasn't really spoken about that much recently. Majority of the US news and US news events, let's rather say, whether they're scheduled or not, has been about Greenland and Venezuela and, you know, just like geopolitical unrest. So I do feel like this has really fallen on the back burner quite a bit.
Yeah.
So yeah, for everybody that's going to trade the US assets and whatnot, do take note of the time as well.
Yeah, absolutely. What about the shutdown? What's your thoughts and opinions on the government shutdown potential? Because that's starting to fly about again. The rumors have it that the government is going to be going through another shutdown. Now, whether that's true or not, don't know. Again, they are all rumors. But however,
I mean, I will wait for it to happen. I'm not going to. I'm not going to open up any trades, speculative trades, based on the idea that it's going to close up. I'll just wait for it to happen. I mean, let's just say that anything I think is possible when it comes to the US now. Like they're absolutely taking the mickey on the one side, and then they throw this information, then it's a backtrack, and then it's when it comes to the US, I am just going to feign ignorance. I don't know what's going on there. I don't want to know what's going on there because it's just today it's this, tomorrow it's that, the day after no, I never said that. The day after said I always said I was going to do this. It is an absolute shit show. So I am not going to give I'm not going to give any leeway to it mentally.
Yeah, although I did watch something the other day. A lot of people were saying to me, like, Will, why is the dollar so weak? What's happening with the dollar? Why is the dollar weakening, etc., etc.? And then I watched this one thing with Trump, and it was him explaining how the Bank of Japan wants a weak yen for good business and for low business costs. And
Wait, was that Trump explaining that?
So again, yeah, this was Trump explaining that. Now, just bear in mind.
I would take that with a whole sack of salt.
This is what I'm saying. So, like, bear in mind, this is the funny-looking orange guy talking about this. However, he also then went on to explain about how if the dollar was a little bit weaker, then it would be cheaper business and a more business opportunity for the dollar had it been weaker. Now, we're starting to see that come into a little bit of play as well, how the dollar is dropping, and we are finding a bit of weakness coming into the dollar. Now, this is super interesting on the base that we've got to take into consideration that Trump says a lot of stuff, but sometimes it takes someone to not listen to the fact or not say the fact that, oh, it's just Trump saying it, screw Trump, he says all sorts, he's full of crap, he's just saying it for bait. Sometimes if you look into what he's actually saying, he's saying everything he's planning on doing and or have done right in front of people, but people don't take him seriously enough, and a bit like what you say, take it with a sack of salt. A lot of people are even worse than that. They go that one step further and go, it's Trump, he's full of crap. Whereas what he does explain, he explains everything he's planning on doing, but the people who listen and really absorb what he says and understands and digests what he says is like, wow, this guy is actually almost dangerous with what he's saying. So I just, when Trump does talk, have a listen to what he's actually saying, not what he's saying for the media. Because like what you find with Trump is he'll say stuff for the media, and that's like the front. But what's actually going on behind is he really is actually telling the truth on what he's planning on doing, but he's putting it as a front to sort of disguise it and be like, yeah, look, guys, we're doing this, we're doing that. We're going to say really outrageous things because when we talk about the political things and the financial things, it's not going to look as over the top as these outrageous political stuff that he's saying.
It may well be, mate. May well be. All right.
Again, that could be just Trump.
Yeah.
Who knows? I just trade what's in front of me.
Let's get into chat a little bit. I see that there is a few questions. We have Unbiased Trader, Richard and William. Good morning, Richard and Will from Theolo Trades as well. The low-key piano, once you pass an account, are there any other hidden requirements before being able to get a payout? None that I am aware of. I don't think that there's any... there's definitely no hidden requirements. All of the requirements will be on the T's and C's on the website pertaining the specific account that you have. We have the 3 accounts right now. three programs. We've got the high stakes, we have the bootcamp, and we have the hyper growth. And each one of them have their own particular rules, but overall they share the same format. Ty Keith saying, hi, Rich and Will. What's up, Ty? How are you? Martin I. Hello, Will and Rich. Rich, you had best decision to stay out from that. Yeah. The way that I looked at yesterday on gold specifically, I had these two areas that I wanted price to climb through, but it climbed out of it way too late. And by this point, I had already switched everything off, gotten ready to get into bed, kind of like thing. So I missed this whole movement, which I'm happy with. I probably would have wanted to get in somewhere over here, but I had some prior arrangements, stuff that I needed to get to immediately. So right after the stream, I basically switched everything off and moved on to, the stuff that I needed to get to. The same with Nasdaq as well. Yesterday, I was looking at this very nice movement here on the New York Open, and the follow-up did not entice me whatsoever. If I go down to the 5 minute, you might see it. This pushed down and then a sudden almost like a V-shaped recovery. I probably would have gotten in somewhere over there, and it would have worked out eventually, but not before I go to bed. So I would have had to have held this overnight. But anyway, so no real interest in that one whatsoever. As of right now, on the NAS as well, same idea as yesterday, as gold for me yesterday. We're stuck between these 2 points right now. We had this gap during the end of the Tokyo session, a small little gap. I don't know if it is viewable, but there's a small little gap over here. And if I open up this, you can see the gap over here as well on trading on MetaTrader as well. So we just filled a little bit of this gap, and then we started reacting off of it, but not very strongly. So I'm waiting for the news event probably a little bit later on NAS specifically. So I don't really have any interest in trading NAS at the moment. I might get into a gold. I might get into a gold trade. We'll see. I am up 2% on this account, so I'm going to probably risk 8% across a trade and then see whether or not I like it.
Yeah, nice, awesome stuff. I was just looking, so I've just uploaded loaded up the YouTube now, and I was just thinking, what's going on? Why isn't my chat loading? Guys, I do apologize. My chat isn't loading right now, so unfortunately, I am completely blind. I can't see you guys chatting, and I've left my phone up close to the window just so I can keep strong signal. But however, my Wi-Fi is not a problem today. So that means once Rich has finished sharing his fantastic charts, I can share whatever I want with you guys. I can share my charts, I can place trades, I can even bring my trading view up, I believe. So there's not going to be a problem there. But the one thing I will say, unfortunately, right now, maybe I'll try and reload my server in a bit, but I can't see you guys chatting. So I do apologize if any of you are asking any questions to myself or Rich or anything sort of chart related. I can't see anything.
That's okay, mate. I will go through the chat for us very quickly because I see I'm very close to being caught up with chat. Theolotrade, thank you to Dirk and to LJ as well. Yeah, thank you very much to Dirk and LJ for carrying this the earlier session for us. Very appreciative of those two. They do so much in terms of giving away information, both fundamentally and technically, and really appreciative of them. We've got Bud Hassa saying teacher 0.1 point candle point trades. Not sure what that is about. Neko Nexus saying how to categorize a setup like an A+, a B, and a C. I think we can go ahead and give this one a little star because this is going to require a little bit of information. So let's star this one. We'll get back to this question of yours, Neko Nexus. Chocker official saying, hi, is there a demo trial on the Fivers? No, we do not have a demo trial. What we do have is we do have a 2.5K high stakes account, which is effectively the cheapest evaluation account that you can get. But what I would suggest is, if you are a good trader, you have proved to yourself that you are a profitable trader, you have a good system, good mindset, good risk management, go ahead and get yourself a 2.5K one. It is, I think, $24 for a 2.5K high stakes account. You can play with that. You get access, once you've bought the evaluation account, you get access to the Discord server. And in the Discord server, you have a bunch of other extra things that you have available to you. We have calls every day of the week, live streams on the Discord as well. We have Q&A sessions with different people throughout the week, Monday through to Friday. There's a plethora of other traders that have their own knowledge and their own experiences to share with you as well. It's an amazing Discord server, like genuinely, but you will only get access to it if you have bought a evaluation account at some point. Unbiased traders saying basically it's a waste of time at the minute. India and China is gaining due to the US mess. Very, very much. Like turmoil creates opportunity, and it's jumping on that opportunity, I think, is the...
It's been like that for forever, like it's the same with wars. Wars make money, and it's super morbid to think about, but like you said, turmoil, like whenever there's something, not necessarily positive, but not necessarily negative, when there's something going on that takes a lot of eyes and attention onto a particular, maybe even disasters. It's super sad to say, but that's how cutthroat this industry is, and that's how cutthroat the finance world is. Disasters make a lot of money for a lot of corporations.
Yeah, I mean, if you just look at what happened with the COVID pandemic, there were a bunch of companies that they came out from the ashes and just, I don't know, they just created their own little luck. Anyway, Jake Shaminga is saying, hi, I just purchased a funded, wish me luck. Good luck. But what you don't need is luck. What you need is good practices, good habits, and a willingness to learn. So you don't need luck, my friend.
We wish you luck anyway, though. just for the good sake. Yeah.
Alfunias is saying, Trump loves to say outrageous things to check, quote unquote, how the public reacts. I mean, it makes sense.
Yeah, 100%.
Some of the stuff that he says is outlandish, absolutely outlandish. To him, it makes sense. To the rest of the world, they're like, huh?
Yeah, I think that's why he does it, though. It's so everyone really hones in on that outrageous thing he said, and the next minute, like Twitter and like all the anti-Trump people, it will hone in on that instead of what he's actually doing. I feel like he's a smart guy. He's a smart guy. He knows what he's doing, in my opinion, anyway.
Well, thank goodness we all have our own opinions. Michael Taylor, big dog. Davide saying hi, everyone. Cello, I entered yesterday evening. I'm in profit on gold 2%. Well, congratulations.
Beautiful. Awesome stuff, man.
Yeah, I want to make sure that you're following your plan. So long as you're following your plan, it's a good trade. If you're not following your plan, this is not good profit, my friend. This is potentially a habit forming trade that might not be great.
Just think about it. If it's a good trade, there's a good chance you'll keep the cash. If it's a bad trade, there's an almost guaranteed chance that you're going to give it back at some point.
Very true. Riveru saying hi. What's up? What's up, Riveru?
Yo, what's good, man?
Jake's asking, what made you guys profitable, you guys, as a trader? We'll get back to this one as well. Also starred already. Watch out, buddy, to Cello. No. Even though the generally caps lock is usually a sign of people yelling, but Cello, I think this doesn't occur often enough to be a problem, mate. So don't worry. Cello, hi, Will and Rich. Can you please have a look at Euro NZD? Sell on the daily, please. We'll have a look at Euro NZD for you. I'll get the chart up so long. Where's NZD? There it is. Mohammed asking, sell or buy? Well, we'll have a look now on Euro NZD whether or not it's a sell or buy. What I can see immediately is it's very, very bearish,
Yes.
just from the 5-minute candle that I have over here. But we'll break this one down for you. Unbiased trader saying, I'm holding a long AUD USD. I shared on Apex this morning. Awesome. We'll have a look at that one for you, unbiased trader. Choco asking, is there going to be a live buy or sell? We're definitely going to try. We're definitely going to try and get an entry today. One thing to remember is that these accounts, the idea of myself and Will showing you the live accounts or trading live accounts, or let's rather say either evaluation accounts, because mine is an evaluation account, but Will is a funded account. We're not going to just trade willy-nilly. We're going to try and take proper, well-thought-out trades specifically on stream.
Yeah,
So
I'm not going to go taking a trade and then just potentially blowing the entire account just to look, just to have a live trade. You know?
yes, yeah, it's always going to be with the right mindset. It's always going to be with the intention of getting good trades as well.
Yeah, exactly.
Grant saying, just tuned into the stream and my favorite SA Welsh combo. Hope you guys are well. Thank you very much, Grant. We really appreciate it, my friend.
That's an awesome comment. I love that.
Yeah.
Grant, thank you very much for those kind words, my man.
Yeah, awesome. It's awesome to hear if people actually enjoy what we do. Obviously, the intention is to help and teach people, but at the same time be entertaining as well. And if we succeeded in one of those two things, then we're happy, mate.
It's nice to hear people like this as well. That's nice every now and then.
Yeah, it's nice for people to say, "Wow, we like these two."
Yeah.
It's like, you annoy me. It's like, okay,
I feel like we don't get that enough. I feel like a lot of the time, like, people love what we say and love what we talk about and how we trade. And then the people who do come on, like, every now and then you get a little bad egg or a rotten egg that come on and go, you guys suck, you guys this, you guys that. Every now and then it's just nice to hear people say, we like you guys. Like, you guys are sick. That's pretty nice. Yeah. Thank you very much. We appreciate that, Grant.
Prarita is saying, try, contest, and learn. I mean, this is in reference to a question from earlier about whether or not we have a demo or a trial thing. I think that's actually a pretty good one. Like, we do have giveaways every now and then on the live stream. We'll probably get to a point where we're going to start activating those again. There's just a lot of stuff that's happening in the background. There's a lot of work that's being focused on. So just a little bit of patience. We're going to start opening up the live stream giveaways again. For now, I think the most of the giveaway stuff is mainly on the hub credit side. But yeah, so this is a good one. So if you can win an account as an example, you can learn how to use the Fiverr's terminals from there. But in general, I think all of the information is pretty straightforward, and it's not a very big learning curve. Neko Nexus, what do you think of institutional traders like hedge funds trade? Are they smart? Are they smart, or they automate their trades? We'll get to this question as well. We can just.
That's a really good question, actually, because that I feel is almost up for debate. But that's a really good question. I like that.
Yeah, that is. Choco saying, if I get after phase 1 on the high stakes account for 2.5, do I need to pay again for the $22 for phase 2? No, you don't. It is a single fee. On the high stakes, you only pay a single fee. And it's the same with the hyper growth. The bootcamp is a little bit different. The bootcamp has a lower initial payment. So hypothetically, you buy a 100K bootcamp account. Your first payment is going to be something like $95, all right? And you will only pay the dividend, that which is still left, only after you've passed the account. So the very first payment is only a smaller payment, and then the follow-up payment is only after you've passed you've gone into funded phase. But that's only with the bootcamp account. High stakes and hypergrowth has got a single payment, and that's it. Secton Matey is saying, do you guys have a limit for holding trades? No. You can hold a trade for as long as you want. You can hold a trade for as short as you want. However, when you go and look at the rules, you will see that there's no real particular like minimum time frame. But the idea is that we don't want people to what's that? Say again.
Super scalp, like HFT, like
scalp.
high frequency trading.
There we go. High frequency and tick scalping. Something that we try to.
Yeah, exactly. Yeah, tick trading.
Tick trading, yeah.
But
so
tick trading basically is high frequency trading. It's like every second or other second, it's ridiculous. I've seen one person tick chart trading, and I was like, wow, it just frazzled my brain.
Yeah. Matthew Jacobs saying, good morning, brother. How are you guys doing? Patience is the key in trading. 100%, mate. I agree with that 100%.
Yeah, 100%.
Choco Official saying, wow, we like these two. There you have it. Awesome. Whoa, we've got Samir in. What's up, Samir?
Hello,
Yo,
guys.
Samir.
How are you? What is up? What is up? I
Good.
see a new setup. Both of you are using a new setup.
Yeah, well, I'm in a different country now, so hence my different setup.
Yeah,
How was your
I-
experience so far in the new country?
Good, man. Yeah, really good. Really enjoyable. Having a little bit of issues with my building, but other than that, the country itself is absolutely fantastic.
That's amazing.
Yeah,
All right.
and then Rich
Hi,
just shifted
chat.
himself.
Yeah, I all I've done is I've just shifted everything because I was supposed to paint this wall last week,
It
but
just didn't get right.
I did not get
What
around.
color you was about to put on it?
That I will divert that question to my wife. She is
Bosses orders, right?
yeah, that's the boss. The boss says this color, this day, and I say yes, ma'am. I will do it, ma'am. No, I'm making her
Yeah.
sound like she's like an evil person. No, she's not. She's
You're not an evil person until you don't do it.
no, I cannot speak ill of my wife. It is just purely untrue.
Speaking of, maybe I should be careful. Like, my partner is literally in the room with me right now. I just got glared at. I was like, oh no.
Francis is asking, how do I join the Discord? First and foremost, you need to have purchased, either in the past or today, a evaluation account. So if you have won an account via a giveaway, then you will not gain access to the Discord. But if you have purchased an evaluation account at some point, you go into your hub, and there's a little section on the left top hand side that has the Discord insignia. You can literally just click on that logo, and it should give you all of the details and redirect you to Discord, and then you will automatically be gained access or given access. Now, if that block is grayed out and you have already purchased an evaluation account at some point in the past or recently, please contact support, bottom right of the hub. There's a contact support section. Go and ask them what's going on. Shouldn't be a problem. If you have not purchased an evaluation account at any point, unfortunately, you will not gain access to the Discord. The Discord is purely for all of those that have purchased and participated in the Fivers community. So we give back to the community from there. Chica FX asking, when is the futures platform coming? Sooner than you think.
Yeah.
A little
Dude,
bit
I'm
longer.
excited for this. I'm really excited for the futures platform to come out.
Yeah, the everybody in the background is absolutely working so hard to get this platform, the futures platform, ready and going. So just a little bit more patience. Like I say, it's sooner than you think. It is sooner than you think. But just a little bit of patience. what I can tell you is that there will be an announcement. The announcement will be global, so it will be not only on the live stream, but it's going to be in the Discord, and it will be on the hub and all of that stuff. It will be on the website. There will be an announcement for it, so just keep your eyes out for that announcement. Anya Miraz is saying hi. Neko Nexus is saying hello, Sam. Unbiased Trader, we have a bonus. Sam is early. Yes, Sam is very early today. No, Sam arrived exactly when he meant.
Yeah, today I was scheduled a little bit early.
We have Theoda Trade saying good afternoon to Sam. We've got Panthers 11 saying hi everyone. I have a question. Allowed to hold trade overnight in funded? Yes, you are. You are allowed to hold overnight. You're allowed to hold over weekends. Just do be careful. There are swaps involved when holding
Yeah,
trade.
literally, just be careful on swaps. That's the one that's a stinger. It's not a secret stinger as well. It's not hidden. It's just a matter of a lot of people forget about it, and then they're like, "Why haven't I taken as much profit? Why is this actually cost me like $50 instead of like $12?" It's because of the swap.
Yeah. So swaps in general, I feel like the 5 versus swaps is very reasonable.
Yeah, they
So-
are to be fair.
But it's still do take notice that you have different swap rates at different days for different assets. So for Forex in general, your Wednesday swap over from Wednesday night into Thursday morning is a 3x, where the rest of the week it's 1. And then for indices, if you're holding an indice over the weekend, like Nasdaq, the Friday night is going to be the 3x swap rate. But in general, it's pretty good. But yes, you are allowed to hold overnight as well as over weekends. Andy93 saying we can't see the third guy. Can you not see his face, or is it when the comments are up that you can't see him? Because if the comments are up, it's going to be at the bottom, and unfortunately, Samir's face is going to be obscured by it. But we're trying to get through the comment as quickly as possible so that everybody can see Samir, because he's a good-looking dude.
He's a fantastic looking guy underneath me right here. Give us a smile, Sam. Look at that. Look at that.
There we go.
Look at that cheeky smile.
All
there.
right. All right, so we have caught up with a chat. There are a few questions that I think we should jump into first. Where was that one? This one from
What is
Neko
that?
Nexus.
I'm just going to interrupt you real quick there, Richard. Before we do jump into the questions, guys, if you are enjoying what we do here, if you like the analysis, if you like the personalities, and if you like the questions that we're answering, then please make sure you smash that thumbs up on the video. And if you haven't already, make sure that you subscribe to the channel. We're super close to 100,000 followers or subscribers. So like the video, share the video, and subscribe to the channel. There you go. I felt like that was a good sort of like digression. good opportunity. Yeah.
What I also just want to add to that is, if you guys would like us to look at specific pairs, please type it in chat. We will try and get to them in an orderly fashion. That's the first thing. And then the second thing is, if you guys are in specific trades already and you just want to share it, go ahead, share the information in the chat, talk about your trade, why you decided to enter, and we can also try and understand how you trade as well at the same time. All right, first question. How to categorize the setups like an A+, a B, or a C? Now, Will, I know you have your A pluses and your Bs and your Cs. I don't know if you have specific gradings for your trades, Samir. So if you guys want to, maybe...
That is a really good question, actually. Like having a setup A, B, C. I think you should take only A plus setups. And how you will know that a particular setup is a plus setup? Once you get that inner confidence that this setup I have taken like maybe 100 or 200 times. Now, I think you should focus on that particular setup only. You should not take B plus setup, C plus setup. Always take, A plus setup. Yesterday also on the stream I was talking about it, like why would you put money on risk when you have slightly disbelief that this trade is little bit less likely to perform in my favor. So I know barrier to entry in trading is very less. You can press buy or sell like immediately, so you don't think about these things. but it is a serious career and it is a long-term career. If you these small things really matters in the long run. So I think you should put money in the risk when you have a little bit more confirmations, when your inner voice, inner confidence is more. And with that being said, I think you should have only one setup, which is A plus setup, because you don't want to put money somewhere where you don't trust or where you have less of a trust. So always put money somewhere where you know that the outcome of this particular position is going to be in my favor, and the chances of that is a little bit higher than 50%. It is similar to doing a business. You don't do business with someone who don't have a track record, or who have a bad reputation. So it is similar to that. You will never put money, you will never give money to that person who doesn't have track record, or who have closed less deals or something like that. You will trust him less. So you can bring that nature in trading also. So I think you should just trade A plus setup. And you are a fundy trader, then it is must to take A plus setups, because you have only 10% drawdown. And considering that thing, you are bound to take A plus setups. That's how I think your results are gonna get better. That's just my opinion. As you mentioned, that will have like B and C type of setups also, but that is my opinion. I always look for. I have only one entry criteria. If that is met, that is my A plus setup, and I just take that setup.
Yeah, no, absolutely. I totally agree. I think that's a fantastic way of looking at it, because if you're going to have A plus setup only, then you're only going to be taking the highest probable chance of trading. For me, I do grade my trades. However, they are all in theory an A plus setup. However, if I look at different time frames, different time zones, different strategies, then I do like to grade the probabilities of the trade. So what I mean by, if I have an A plus setup, it's ticking all my boxes, all my confluences. If I have a B play, like a B setup, then it maybe lacks one or two confluences. If it's a C setup, then it lacks like too many confluences. I won't take a trade unless it's an A or an A plus. However, I will look to consider a B setup, because if it's on an account that maybe I'm trying to pass, maybe it's a phase one or a phase two account, then I'll consider looking at a B setup with a reduced risk. However, if you're in a live funded stage, or if you're close to funding, or maybe you're trying your hardest to sort out a mentality issue, or maybe sort out a rules based issue, then only take A plus setups. The only reason I grade my trades is because I want to be looking at potential trades that could, like, for example, forward tested. I'll forward test a B setup. I won't take a B setup. However, the forward testing is my way of being like, okay, let's see how this would have played out if this confluence wasn't a thing. Then I'll chart that down. I'll have a look at that. I'll see how that gets on. I'll journal that, but it won't be part of my journaled trades. Whereas if I'm actually taking a trade, it's got to be an A or an A plus. And obviously, depending on whether or not I'm in a funding stage or whether I'm actually in the phase stages, like the challenge stage, will be depending on the risk that I'm taking with it. So the best thing that I can suggest for other traders out there is you take A plus or A setups only, nothing else. Because that is really what's going to make you a profitable trader. The B setups, the C setup, don't even look at a C setup, but the B setups or the B plus setups, depending on how you want to grade your trades, that will come at a later date. That will come when you're a little bit better, a little bit more profitable, a little bit more experienced, and you know what you're looking for, and you're tweaking parts of your strategy, or you're tweaking maybe your back testing, your forward testing. More times than not, I will not take a B setup, and more times than not, if I do take a B setup, I usually slap myself a little bit, because perhaps I shouldn't have taken it. So that's the one thing I'm very much with Samir on this. Be very, very careful grading setups. You shouldn't grade setups unless you're at a stage where you're really fine-tuning and tweaking your trading.
Yeah, it is a
But
serious business, even
yeah, no,
one tweak here and there
exactly.
can impact your results.
Yeah, exactly that. And I think a lot of people, like you're saying, Samir, it's a very serious business. We're little fish. We're a joke to the institutions.
Yeah,
So
exactly.
why are we going to give them something to laugh at? My thing is, if you're gonna try and create a career out of something that the institutions are gonna laugh at us for, don't give them a reason to laugh.
Yeah, that is a very good point you mentioned.
So I think if we are going to look at how to categorize a setup, I think exactly what Willa has said makes the most sense. Find something that you have statistical data on that suggests this is your most profitable. If you use all of these specific confluences, this is the one that statistically provides you with the best results. Let that be your A plus setup, and let that one be the one that you try and get the most, exactly as what Samir was saying. Try and let that one be the one that you take more frequently, or at least let that one be the one that you take first. Let that be your first priority. Now, if on a day you're seeing, okay, I'm getting 80% of my confluences in place, but I still have backtested data, but it's not as good as the first priority A plus setup data. Let's say instead of it being 80%, it's 70%. It's still considered profitable, but it does tend to maybe lose a little bit more often, or you can be in a trade a little bit longer than normal. You can call that then your B setup as an example. So prioritize them from the ones that are first and foremost the easiest for you to recognize, and the ones that are the most simplest for you to enter. So you're not sitting here thinking, oh, shouldn't I? It's very clear to you. This is my best setup. I have statistical data that that proves, at least to a point, that this is my best setup, and let that be the one that becomes your focal point. And then if you're not finding it, look to see if you can find a secondary setup, which is then your B and then your C. But there's something that I would add as well is consider your risk when you are looking at an A plus setup, a B or a C or something like that, however your grading scale might be. For your least likely trade setup, a C as an example, lower your risk with that one. So if you normally would have gone 1% with a plus setup, go to 0.25% or even 1/10 or 0.2% risk with your C graded setups until you have built enough enough profit in your account to allow for you to risk a little bit more or be a little bit more risky with your less profitable style, profitable trading strategies. Then, where was the next question? I have to go down. Jack's asking, what made you guys profitable, you guys as a trader? So, Will and Samir, who wants to go first? I think
I can
you're...
go first. I think you are muted. Will is muted, I think.
Yeah,
I
I
think what
realized.
made
Yeah, see,
me
I'll let you
profitable,
go.
yeah, now you're back. So I was on a point. What made me profitable? I think what made me profitable was stopping, even if it is a winning day, no matter if that is a losing day. If that is a winning day, I stop. Losing day, I stop. And in that duration, in that particular period of time, I have done many mistakes. I have done strategy hopping. I have over risked. I have over leveraged. But I think this one practice or this one habit, stopping after taking one trade, no matter what the result is, can be a loss, can be a win. I think that made me profitable. I was doing the mistakes at the same time, but this one practice or this one trading behavior helped me secure some payouts. So I think just take one trade a day, no matter if that is a win, loss, and paired with the right strategy, paired with the risk management, I think you can really do good in prop firm space or in trading. What kept me profitable or what made me profitable? This one simple thing, which is I stop if that is a winning day, I stop if that is a losing day. That is it. It means one trade a day. That's it. Whenever I break this rule, I have not seen good results for me. So that's what one advice that I would like to give to you.
Yeah, nice. I appreciate that. That's a good piece of advice there, Samir. For myself, what was my winning? What got me profitable would have been less is more, understanding less is more. So I went from trading every single day, day in, day out, no matter what. By the way, on gold, I'm looking for a buy, waiting for the 15-minute to close above. So if we can get a 15-minute close above here in about 5 minutes time, I'll probably be looking at buying on gold. Only issue is I'm looking at this area on the 5 minute as a point of potential continuation, assuming we're on the downtrend. If you're wanting to look at an uptrend, then this is a potential point of reversal. So a little bit worried about this area here. Looked really nice on the 5 minute, but I want to see the 15-minute break and close above with some conviction. Anyway, what got me profitable was understanding that less is more. The ability to actually take a trade and then forget about trading as a whole was really difficult for me. Especially when I went full time. So what I say to a lot of people is when you do get into trading, do not rush into full time trading because there's a massive shift and you've got to be so comfortable with your profitability before you jump into full time trading. Because what'll happen is you'll go from making good money trading and be like, yeah, this is sick. I'm making good money. I'm happy. And then you'll go into not having as much, not being as occupied, let's call it. So like in a 9 to 5 job, you got to trade in the morning, maybe a little bit of lunch and then trade in the evening. When you go full time, you'll end up having so much time on your hand that you'll overtrade, you'll be bored, you'll be looking at opportunities. And this is something that I really struggled with. Like I was profitable when I was trading with a full-time job. And then I actually got into full-time trading and blew a few of my accounts because I was just bored. I was just sitting there twiddling my thumbs, super bored. I'd be there binge watching TV programs, being like, what am I doing with myself? And then you'd realize as well that you're making enough profit to survive, but you're not making enough profit to actually go out and enjoy every single day. So there's a very fine line between profitable trading and full-time profitable trading, and knowing that less is more and being able to be comfortable stepping away and being bored during the day, I think got me profitable. But what about yourself, Rich? Because what got you profitable as a full-time trader?
The thing that I think was the most imperative for me finding my rhythm in the market was first and foremost to kind of like stop strategy hopping, commit to something, and then see whether or not you understand that thing that you're trying to commit to. I think that coupled with the fact that I do have a risk management background, that did help. It did already help that I had an idea of something that I could do to make one aspect of trading a little bit easier for myself. But I think the thing that gave me the quickest route to profitability was not the consistency necessarily, but simplification. I try to simplify my approach because it's very easy for people to get overwhelmed with what they see and overwhelmed with data. And you see something in hindsight and you think, oh, I should have done this thing or I should have done that thing. I think trying to simplify your approach and try and simplify the actual trade as much as you can without losing the profitability of that system. So I wouldn't say, oh, it's easier for you to just remove the EMA because the EMA is making it confusing for you, but the EMA is integral to your management of that trade and your strategy specifically. I'm not saying that. I'm saying if you have to get a EA to help you do like here on our or the position sizer. Instead of you trying to calculate manually, oh, what lot size should I take for the specific asset that I'm looking for? Get yourself an EA, like for argument's sake, the position sizer, to do that on your behalf. It's simplifying it a little bit. Do understand how to do it manually if you needed to, but try and simplify it as much. And I think that was the thing that ultimately led to, or had the biggest impact, let's rather say, in me becoming profitable, was just simplifying and making sure that my approach was still habitual and still as categorized as I could have it, but just simplify.
I think a lot of people look at simplicity in trading as EAs, and they want to be like, yeah, I want to make my trading so simple. I want to make it automated, and they straight away think automations when it comes to simplicity in trading. I think they got to understand that, like you've just mentioned, simplicity in trading isn't automating your trading, isn't using an EA, isn't necessarily relying solely on indicators. Instead, it's reducing the time and reducing the effort to make your analysis quicker, to aid you and to help you in your analysis. So, for example, like your sessions. So I know that you use sessions volume. No, sorry, not session volumes. You use session time zones in your indicators. Now, that saves you the time of marking out the high, marking out the low, marking out the start, and marking out the end, and also marking out the crossovers of each session in the FX industry. So what that indicator allows you to do is just straight away visualize it without marking it out, without working it out, especially if you're crossing over with time zones. And same goes with risk. So, for example, like you again, on your MT, you've got a risk strategy. So it saves you using a pen and paper or a calculator or whatever you use to calculate your trade risk, or just straight up gambling on your risk. It saves that effort, and you're able to put in all the inputs and get the exact output that you need to calculate risk for your trade. That's the luxury, and that is what simplicity in trading is. It's to aid you in saving time so you can focus on the analysis in hand. And I think that's what people lose and forget when it comes to simplicity in trading. People always think that it's like super high risk, gold strategy, scalping bots.
Yeah, you mentioned a really good point. I just want to ask, keeping in mind that we have some interest rates and all these, big heavy news later in the day, will you be trading or will it affect your trading decision? I just want to know if, does this.
Yes, it would. So depending on the time the interest rates come out at the moment for me. So if the interest rates come out and it's like sort of 10, 11 p.m. onwards, which right now it is 20 to 9 at night. So there's a good chance the interest rates later on coming out aren't going to affect me that much. I'm not in a trade and I'm not holding overnight at the moment.
Okay.
So it won't affect me. However, a little bit like last Thursday evening where I entered into, in fact, I actually entered into this trade here, as you can see on Euro JPY. So I actually entered this trade here on Euro JPY. That would have affected me. So these interest rates coming out would have actually affected me, and I would have had to take it into consideration. Whereas at the moment, no, not so much. There it is.
For me, it impacts me quite a bit because I'm only focusing on trading Nasdaq, and
Yeah, yeah.
obviously news around the US as well as news during the US session is going to impact how Nasdaq is going to be impacted. So I'm going to probably step back and not do any trading specifically on gold, on US pairs, or any of the assets like Nasdaq, US 30, or anything like that. So I'll stay away from the indices as well. But it's still a fair few hours, so I will most probably try and get a trade before then. So I think closer to the time you might see a lot more volatility. You might see either slowing down in preparation. But other than that, I always take into consideration the red folder news days because those are the days that statistically I have the worst profit days. Those are my big losing days. So I just don't trade news at all. Just
Yeah, I also don't trade news, and I have the same perspective. If my trade is, let's say, 4 hours, we have a time of at least 4 to 5 hours, I might can execute the trade. But as I'm close of passing my accounts, I think I should not risk my hard-earned profits. So I don't want to make any mistake that can ruin my profits. This slightly change in my trading behavior can give me long term good gains. So I think I should avoid trading today because, as we all know, opportunities are there almost every day in trading. So even if you miss one day intentionally, I think it is okay. So I think I should not take any trade today unless I see a very, very clean setup, and that also should be, 3 to 4 hours
Yeah, no.
before that particular time window.
I was literally about to ask you that, Samir. So, what would your time cutoff point? Because I'm sure people in chat are probably wondering a very similar thing. What would your cutoff time be prior to news, and what would your re-entry time be like post news?
I think based on my previous data or my previous accounts or my kind of my performance,
Mm.
holding trades during the news it has not been the good thing for me. So I will just close the trade before the news, and let's say if it is in drawdown or it is in profit, I have to close a trade before the news, as I don't want to
I was,
risk
I was
my
gonna say, like,
money.
how, like, are you heartless with it? Are you like, it's in like minus 0.3% drawdown, or you're like $500 drawdown, like, screw it, I'm cutting it now, I don't care? Or would you look at it and be like, oh, go on, it can push a little bit longer? Like, you're gonna like really edge yourself
Yeah, yeah.
closer and closer to that news.
I have been there, the things that you just mentioned. I have blown almost like 200 plus accounts. I have been through every market condition or every market cycle, where I'm holding the trade during the news, where I'm in the drawdown. So now I'm really brutal about it. I have seen myself, if I just do a self talk, is this thing gonna give me long term gains, or is this thing gonna produce me or make me profitable trader? So I'm right now or nowadays I'm really heartless about it. If I have to close a trade before the news, I will close a trade because I know I can save my account that way.
Yeah, good. Yeah, literally that. Good man. I was hoping you were gonna say that because bro, I've been the exact same. I've been sitting there on my phone, like, go on. It's got a little bit more in it. It's got a little bit more in it. Come on.
I've
No,
been
no.
there where news has played in my favor also, and it has been the opposite also. So it is just
Yeah,
50-50. But the case is that if it goes, if it ended up not being in my favor, then I'm gonna have a huge slippage and all these things. So keeping that
yeah,
thing, I think I don't wanna do this silly mistake because I consider this as a career, and these type
yeah,
of mistakes I think you should not make when you are choosing this thing as a career, because these things are holding you back. I came to realize it after so many years. But if you want to do this thing professionally, I think you should have this kind of a behavior which we all are talking about. You should not risk when there is news, because you can get huge slippages, and of course the price can go also in your favor, but it's a two-edged sword. You have to protect your account.
yeah.
very,
No,
very,
literally
very important. That I think that is definitely one of the more important things is understanding that whatever actions you're going to be taking is going to be reflected in your account. And yes, sometimes
that.
trades are not going to go in your way, and that's fine. It's expected. You're not going to win every trade. But I think people also kind of forget that the approach that you have is also going to have more of an impact on whether or not you're going to have success. It's not just the market itself, it's your input into the market. If you deliberately choose to FOMO into a trade, or you deliberately choose to revenge trade after losing a trade, that is severely going to impact your account, first and foremost. And secondly, and most importantly, it's going to impact your psychology. It's going to impact your psyche, your emotions. Tomorrow, you might not pitch up with the same intensity that you had yesterday, but it's it's not always a bad thing to not enter with intensity. You can have like the intensity of I'm going to learn, I'm going to just put in all the good efforts and all of the, but it can also be the intensity of all of the negative stuff. I'm going to sit here and I'm going to be angry and I'm going to throw stuff around. So it's understanding that your actions have consequences in the market, not necessarily on the market, but on your account and your psyche. So very important.
Yeah,
Very important.
mentioned a very good point. And the problem is that the access to this trading or platforms are so easy, and it is so easy to press buy or sell. So people have no accountability. No one is above them to tell this, do that. Like in job or when you have business or whatever. So I think you should
You
take
just
all
hit the
these
nail on
things
the
under your control if you want to
Yeah,
do
I
this
mean,
professionally. If you're doing this for hobby, I mean, you can do anything. But if you're considering this thing as career, these small things do matter.
yeah, absolutely. I
Yeah.
think you hit the nail and really hit the nail on the head there as well. Is the fact that if you're in business, then you've got what you need. You've got what you want. You've got it all set out in a plan. Let's say I don't know, let's say you sell, I don't know, chocolates, or let's say you sell like beer. Let's say you sell bottles of beer. Then you know how much to buy in. You sell them. You buy in. You sell them. You pay staff. You etc. You know, you can coordinate your expenditures, etc. Whereas with trading, it's way too easy to just click buy or sell. It's almost gamified that you can
Yeah, yeah,
just click buy, click sell, and magic happens. You know, it's very much like if you try and explain to your parents, especially those who aren't very knowledgeable around the financial markets or around what happens in the finance industry, then they're going to look at it and be like, they're just not going to comprehend it. They're not going to be able to understand what goes on when it comes to you click one button, it goes up, you make ridiculous money. You click the wrong button, it goes down, you lose ridiculous money, but then you've got to risk manage. That's why so many people struggle to understand, and that's why we have the whole debate whether trading is gambling. Whereas if you're in a business or if you work for someone especially, you get told clock in at 9, clock in at 8, leave at 5, leave at 6, leave at 8, whatever your shift time is, and then you get paid at the end of the month. Congratulations, here's your money, run along. It's super straightforward. It is super ABC, very black and white, whereas trading is so gray. It's such a gray area that there's so many probabilities that you can mess about with and so many things that you can tweak that it's really difficult. It is super hard to actually become a profitable trader because everything is in your court. Whereas, like we discussed the institutions a little bit earlier, and it may be a good segue to jump into that, Rich, regarding that start question. Is institutional traders have designated jobs. They come into work. Richard Butler is the risk manager. His job is to make sure that all risks are appropriate. Will Davis is the technical analyst. He makes sure that all trades are set according to a plan. Then we've got Samir. Samir is the executioner. He's the guy who places the trades. There's 3 different brains functioning according to what they should be doing. They can be a master in each and every discipline they do. However, Samir, Will, Richard are all individual traders in their own account. They've got to be a risk manager. They've got to be an executioner, and they've got to be an analytical trader. You know, so they've got to have all these different platforms and all these different sort of sections in their own mind. So you've got to be all those different job roles in one person. Whereas in the institutions, you've got set job roles. So that's one, you've got to master that one job role and let the other guy worry about the other thing. Whereas us as retail traders, we've got to master every single job role. So that's an extra pressure. It's something that we've got to take into consideration, that there's more pressure on us as retail traders than there is as institutional traders, in my opinion, anyway. But I don't know, what's your opinion on that? Anyone? Rich?
Sorry.
yeah. You are right. You have
Sorry,
covered it.
I was caught up with
You have
something in the
covered it
background here.
good way. I was reading the comments here. I think I read the comment. I think I skipped it. Yeah. Why do mentors and guru only post winning trades? When I was starting to, mention about these points, I mentioned that I lost 200 plus accounts, prop firm accounts. So here at the Fivers, I don't think so. We are talking about winning trades and not losses. We are completely open about our accounts, and Will is trading his account live here in front of you. This account was in big drawdown. I don't know if I think you are a new viewer, so you don't know about this, but if you are following us for quite some time, then you will know that we are not promoting any winning trades or not like this.
Yeah. Also, guys, by the way, I'm just seeing we've just tapped over 300 live viewers. Please, guys, if you haven't already, smash that like button. Let's see if we can get well over 200 likes on this video. Make sure you subscribe to the channel because we are so close to 100,000 subscribers. Super close to getting that play button. Absolutely smash out that like button, guys. Please, it means a lot to us for the growth of the channel. Subscribe as well to the channel and make sure you share with other traders. Make sure you share it with other people who may also be interested in trading. Meanwhile, I'm going to bring up gold real quick because I am now going to enter in on a. Ooh, that was close. That I nearly entered in on a 2 lot. I'm going to enter in on a zero point 0.2 lot size gold trade. Drop back down to the 5 minute because we had some really nice close on the 15-minute time frame. I'm going to drop my risk down here around about 400. What would it look like down here? Okay, I'm going to risk 600 as a hard stop, but I'm going to put my alert down here at the moment. And then I'm going to TP up around here somewhere. So there we go. I've now entered in on gold as a long, guys, like I told you that I wanted to do. I actually wanted to be entered a little bit lower, around about 52.69. However, it wasn't looking that nice on the 15-minute. However, now we've got the break and close above on the 5 minute, and we've also got the break and close above on the 15-minute. It's not the nicest break and close in the world, so therefore it's an A setup, not an A plus setup, because there's a little bit of a wick on the top. However, this is still in my plan. The 15-minute looks nice. I've waited. Let's see how this goes. So and for those of you who are asking, are there going to be any live trades today? This is a $100,000 live funded account, which I am currently in now a live trade as well.
This market condition is really crazy on gold.
It is. Yeah, it is. It's
Rich is
bonkers.
trading from like many years. Like I am trading from 6 years. I have never seen this type of market condition where every morning I see gold is making new highs or it is just breaking resistances or these kind of market condition.
Do you know what I've been considering? I've been considering going to bed way later than I'm supposed to, and then waiting for the rollover into the new day, and then looking for buys in gold. I've been considering it, but I don't want to just jump in on that like blindly and then get my backside whooped because I'm jumping into something that I haven't tested.
Yeah,
I see
fair.
a fair few.
Gold has not been my best friend.
No, it has not. I don't know. Like I know that it's probably going to carry on going bullishly, but then I decide just to get in at the worst times. So I've decided, you know what? Let's not focus on gold. Gold is being gold. I'm going to focus on other things that I've got statistical back-tested data that suggests I have it.
Fair.
Yeah, exactly.
That's a smart move, man. It's a real smart move. To be fair, I've been the same. Gold for me, early 25 was really crap. Second half of 25, gold just gave me pots and pots of gold and made me a rich man. And then at the start of 2026, gold is just, I've lost every trade I've placed on gold. So
gold has giveth, gold has taketh away.
Yeah,
Unfortunately.
exactly. Yeah.
Gold has always made blow my account, so I just quit this pair.
Look, I think it's fine. I think it's fine if you feel like you have an edge on a specific asset and just focus.
Yeah, exactly.
Focus on it. I have come to notice that I do not have an edge on gold. It's just I have an edge on Nasdaq. I have an edge on USD JPY. I have an edge on Euro USD. But when it comes to gold, gold is a different beast recently, and it's the same reason, sort of, why I haven't really looked at silver. It's just like, am I just jumping on the hype train for silver? Is silver going to do the same thing that gold has done to me in the past, and that is just prove to me that I don't have an edge on it? Yeah. I don't
Gold
know.
has been pretty savage recently, and it can be pretty savage, but I don't know, man. I
Yeah,
think
you're
everything's a bit savage. It's the same with any Euro pair, like any major at the moment. I'm a bit like I don't know if I want to trade right now because I don't know if I have an edge. But so I think it's just pick your devil. They're all, they say the better the devil you know than the devil you don't. At the
Yeah.
moment, pick your devil because I think every single asset out there is going to have some severe issues at the moment or some turmoil. So I think it's a matter of just pick what you're most comfortable with, pick what you've tested the most, and just put your armor on, get your shield, draw your sword, and just fight your way through it.
I
Yeah.
think you mentioned a very good point. The thing you just mentioned, pick something that you are comfortable with. I think once a trader find this thing, like they can execute effortlessly, they are comfortable while being in the trade. I think that will be the aha moment for you. You are comfortable, being in the trade. You are comfortable trading the particular pair. I think then your trading will change forever
You're
because
going
you
to
are
have
comfortable
many
taking
aha
a loss.
moments in
Yeah,
trading, I think. You're going to have many. And there's going to come a point where you're going to be like, okay, I'm tired of realizing
yeah,
things. I realize and I realize and I realize. And at some point, you're going to be like, okay, I'm done realizing. I'm going to start putting action. I'm going to start doing the actions that require all of those
yeah.
things. I just wanted to say, I'm probably going to butcher this, but it's what little Susan Gelboy. Richard Butler definitely is from South Africa. Richard, you're from South Africa, right? I hear the accent. I am 100% from South Africa, my friend. I was born here. I live here. I grew up here. I am here currently. So I am from South Africa. Yes. My apologies if my accent is grating to your ears. It's just that's how I talk.
It's the accent my mammy gave me, so it's the accent you guys get to listen to.
Yeah. Destructivist saying, whatever be the case, trading is gambling, no math, no algorithms. It is pure gambling. Trading is gambling with knowledge. That's it. So on Friday, if you have an account with the Fivers already, on Friday in the Discord, join LJ and Akram Void. Join their chat section on Discord. Okay, link is in the Discord for Fridays. Okay, join us there because on Friday we're going to be discussing this exact topic, whether or not trading is gambling. And I know people have their opinions regarding it, but there
Bro,
is
you don't
very
need to discuss it. You said it.
yeah, fair. I'm just saying that there are differences, vast differences between trading and gambling, which I'm not going to get into now. I think most people here already knows my standpoint on it. I do come from a gambling background, quote unquote. I was a semi-professional poker player for a few years, so I I'm I feel like I'm well educated and experienced enough to know the difference between the two. But yeah, join us there on Friday, please.
Nice.
Join us. It's an open voice session, so you can have your camera on, you can have your microphone on, and you can just chat with us. We can have a discussion. Please come
Or
and join.
or you can just be a keyboard warrior. Not saying that you are. If you wanted to, you're more than welcome to keep yourself muted, keep your camera off, and just join in, type in chat. That's absolutely fine as well. You don't have to put your camera on or your mic on if you don't want to. That's the luxury about the Discord. You can do it.
Dude, don't go ahead and call people keyboard warriors and then say, but you can leave your camera off. It sounds like you're antagonizing them.
Try
But
to
yes,
rage.
true. You don't have to participate if you do not want to, but it is an open invitation. If you have purchased an evaluation account at some point with the Fivers, get into the Discord and join us, please.
Yeah, I'm $50 up on this trade at the moment in gold, and we just had a 5-minute break and close above that previous line. So I'm super happy with that because that's what I was looking for. We saw like a mini, like micro wick here, and then we had 1 wick here, 2 wick here. We moved up and started pushing back down, which would have been a 3rd wick, which would have been like an opposing rejection confluence. And I was like, I just don't want this right now. So I wanted to see a break and close above, which we got. Really nice on the 5-minute. 15-minute looks pretty strong. I want to see what happens on the 15-minute. My discretionary TP1, I suppose, would be up here at around about what do we want to say? Around about 52.86, I think would be a nice area. What would that look like on a P&L level? Probably about 100. Oh, about 280. Okay. So I think that'd be pretty cool if we can hit that. If we can hit that before I go to bed, I think I'd be a pretty happy guy. You know, I reckon I got about 3 hours.
You know what, Will? If you just jump onto my screen quickly, I can show you what I'm seeing.
Absolutely. Let's have a look.
You might like it. So, as most of you know, I work on the idea of bases, rally-based rallies, drop-based drops, and what we have here is a base area on the 15-minute. So the way that I look at it is back and forths. It's an arm wrestle between the bears and the bulls. At some point, one of them wins. Now, if price were to come back to that point, you can either see a similar reaction or, you know, the one that lost previously now has more vigor and they try and push a little bit harder during that phase. So over here during Tokyo, we have from yesterday, wait, let me just go on to this one. From yesterday, we've had a very bullish nature coming out of New York. This is New York session. This is Tokyo session. Out of New York, onto rollover, bullish. All right. From there, we had a little bit of a, let's not call it a retracement, but just a slowdown before a continuation of this bullish trend. So every time that there is a slight pullback on for the bears, that is a potential area price can react. So this was the most recent area that got tested. So right over here, it is in line with the 50 EMA as well. It is in line with the idea of us being bullish. We had a slowdown on the 15-minute over here, and now it looks as though we're starting to present with a bit more bullish action. So, bit more bullish action, bullish trend, 50 EMA reaction, as well as a reaction from a base point, an area where previously bears tried to sell, break this upward trend. They failed, and yet they failed again. I do think that there is a potential, though short-term potential, for us to come and test the highs of London. Whether it's the high point itself, or it is the high point plus maybe the candle body, just that range. If I go down to the 5-minute, I think that is probably the range for us to come and test with your trade specifically, Will. Yours specifically. So
yeah,
I think there's a chance.
that would be nice. Yeah, that would be nice. I'm also looking at a GU buy potential. We've got 2 minutes. I want to see how the candle closes. I'm just going to flip over onto my chart real quick so you guys can see what I'm looking at. $81 up on gold, looking quite nice. So just going to leave that play out. GU, we've got 2 minutes now. Break and close above this area here. We've had this beautiful consolidation. Break and close above, pull back, break and close, break of higher. So we're about to create a 5-minute higher high. A bit curious to what's going on here. If we can break above that, that would be pretty cool. Okay, we just reached 100 now. If we could break and close above here, that would be pretty cool. We've got a minute, depending. If we can break above this box, or preferably if we can break above this high, then I'd be pretty happy on that with GU. But I don't want to see too much of a wick. I want to see a nice, confident continuation suggestion, like it is now. So if we can continue this now, I'm going to be pretty happy. And then I think I'm going to be buying on GU.
GU buy.
Yeah, okay, there we go. So I'm just going to chuck a 2 lot on GU.
We did make a recent higher high on the 5 minute, a higher low, my apologies, not higher high, higher low on the 5 minute, and we are yet to come and test the most recent high swing, which was at 13800 flat. So it looks decent. Looks decent for a sell, for a buy. Sorry, the potential for a buy. Just wanted to say for everybody that's in chat, a little bit later in the stream, we will have the CEO of the Fivers, who is going to join the stream to do some live scalping. Now, for anybody who knows anything about the Fivers, you know that Saul, the CEO, is an absolute legend when it comes to trading. He is a swell guy. He is just so knowledgeable. So if you have any questions, if you have any remarks that you would like, just tell him how awesome he is. Join us a little bit later with Victor. Yeah, with Victor. Saul should be here this afternoon to do some live trading. So please go and give your support to him. He's running this whole the whole Fivers company. He is the CEO. So if you love the Fivers, it's because of this guy. So
yeah, in all fairness, like as well, I've spent some time with Saul outside of work. Like so he was actually at an event that I was speaking at, and we went out for some like just downtime, and he is genuinely an awesome guy. Like honestly, he is such a cool guy. So like I take my hat off to him. Like he's got a massive weight on his shoulder. He's got an awesome company that he's running in front of you guys here. You know, we wouldn't be here without him. The company, you guys wouldn't be here. Our careers wouldn't be here without him, because, you know, obviously being in charge of the Fivers comes with some responsibility. You'd think he would be a very serious guy. When it comes to his business, absolutely. But when it comes to having a bit of fun, come chat with him. He genuinely, come chat with him, ask him some questions, get to know him a little bit and chat. He is genuinely a super cool guy.
Agreed. Agreed. Definitely agreed. I see Mike saying, I know him from when he was with Apiary Fund. We met in Utah. Oh, so Mike, I'm assuming you are from the US, in which case, welcome.
Yo, welcome.
We are going to have the futures section of the Fivers be released at some point very soon. And I do know that the US market is like waiting, like really waiting for that to happen. So, hell no, Canadian. My apologies. I did not mean to offend.
Do not get that mixed. Do not call an American a Canadian and vice versa.
Hey, you are North American. Yeah, didn't mean to offend. There was a question earlier, and I had to giggle about it, and it's Puraria Fund is saying, is South Africa safe? And I thought could be, couldn't be, depends. And then he replied by saying, so in other words, better watch my back in South Africa. Okay, got it. And I had to like giggle about that because it was kind of funny. I think South Africa is probably as safe as the US is right about now. I'm not going to talk about the geopolitics of it, but I think
let's avoid that one. Here, guys, I'm gonna have to dart out real quick. So, guys, I'm gonna love you and leave you. Just to let you all know, I am in this gold trade. There's a good chance I'm going to be taken out relatively soon as we're approaching this high here. Just going to keep an eye on it. I'm going to manage it, see how the price moves. If it's going to continue this really fluid momentum, then I'm just going to leave it. However, if we start slowing down on the 5 minute and the 1 minute, then I'll probably just take out, because we're about to hit, well, we've just hit $300. There we go. So we've just broken this high. However, GU, it's starting to be a little bit wicky. You know, we're getting this pullback in the break and retest now. So let's just see how that wants to react. If that can take highs, I'll leave it. If that really slows down and shows that it's not doing what I want it to do, then I'll probably just leave it. I'll probably just take out. So guys, thank you very much. I'm going to love you and leave you. See you all tomorrow. Stay safe, and don't forget, high impact news later.
Take care, Will. Lovely to have you here. Right. I'll
Mikhail
be also
Davids, are you also
I'll be also hopping off in about 2 minutes. So yeah,
sorry, I was
actually
just going to
some
say, Mikhail Davids is saying, shout out from Cape Town. Dude, thank you very much. Thank you for being here with us. Louis saying thank you to Will, and Theola Trades also saying thank you to Will. Yeah, we are very thankful for having Will in with us. What are you looking at the moment, Samir?
I was looking at silver because in the chat someone was asking about it. I was drawing some tools here. So let me give you some thoughts on silver. If you go on the daily time frame, we are just printing bullish, same as gold. But of course, gold is moving way too aggressively. If you go to the 2 hour, let's go to the 1 hour actually. So I was drawing my Fibonacci from here to here. I think next spot for silver is this area, which is 120, let's say 123. So for that, I think price needs to break above this so that you can consider, yes, momentum is getting aggressive. So above this, you can take a buy. But right now, we are reacting from this area. So you really want the price to go above this area. So that's how you can trade silver. But if I talk about my normal pairs, which is US 30 and NAS 100, I think today staying away from charts is good. Why? Because there is interest rates decision. So we might can see some rangy price action, and yeah, you will not see a good momentum today. But of course, gold is on heavy run. But still, I think waiting would be good. Waiting for at least the interest rates, then you can take your trades tomorrow because every day there is a new opportunity. So today I'm not going to be trading that actively. If I get very clean price action, then maybe. All right, we have Victor here. Hello, Victor.
Hello again, gentlemen.
Hello,
All
Victor.
right.
Hello.
How is the day after? How is everyone assimilating the day after, digesting those gigantic, monstrous? I'm falling short of words to describe the yesterday's price action. I mean, Trump came, and that's not even called an earthquake. That's like a planet shake.
Yeah, he is global. Let's put it like that.
He's definitely global. I'll attest to that. How are you
Yeah.
guys? Were you guys in any trades yesterday at the end of the day when Trump decided he wanted to bless us with his volatility?
No, I think today also will be a no trading day for me. But guys, I have to hop off, so I'll see you in the next stream. And again, it was lovely to be here, and thank you to our viewers also. So with that being said, guys, I got to go, and I will leave you in
You're
the hands of these
leaving, Sam.
gentlemen
What are you doing? You're leaving us. What's that
Yeah,
about?
you're so used
for
to
today.
being together, and now you're deciding to opt out. What's this? What is this?
Yeah,
For, for a
we don't
very
accept
small time.
we don't accept your parting. No, sir. No, thank
I'll
you
be back.
for
I'll be back.
of course, man. I'm just we're just poking fun, making the day
Making late.
lighter. Because we gotta enjoy our lives, right? Let's enjoy the
Yep.
ride while we are doing the things we love doing, and even if the market may be shaking us one side to the other. I mean, I'm pretty sure from yesterday's move, a lot of people were affected. That's why I'm trying to
Yep.
make it a little lighter than usual because and what we have on the charts here, the daily on EU. Me, I'm not talking about here on gold. I'm not talking about GJ. That are very common. They're that they're volatile. They can run like pound the kiwi. You know what you're dealing with. But with EU and maybe a little less so with GU, they're supposed to be stable, like rangy, like average. I mean, the rangy, the ranges. I mean, average ranges, and we see this happening. This gigantic candle. I'm gonna make it short, Sam, because I know you are.
No, it's
Maybe I
okay.
should. Okay. So
It's okay.
we can see the ATR. It's a 75, rising quite fast. Not long ago, it was around 58, 55 a day, and then we have such a day, 232 pips. That's what. That's over 300% on, you know, EU, 300, three times what the average is on any given day, and that's not even, the news of the Fed rate, interest rate hasn't come out yet. That was just Trump speaking at the end of a very, volatile, big, large, candle day, and I'm pretty sure, I'm going on a hunch here. I don't have any data, but I'm pretty sure a lot of people in the audience were caught off guard because I was one of them. I had a short at the end of the day, thinking, this is likely with the end of London. For those who were in Discord talking about, I was talking about this, the end of the overlap, New York, London. We had some reversal patterns. We had a reaction off of a level. There we go. That's the level that I was talking about. Not very significant, but it was enough for us to take advantage of. And I actually took a trade. I took a few. I had it was a couple of scalps. I had TPs, so they hit profit, but then I had some extras, and they were, I was stopped out at the other side of that range. That's quite a huge, not a huge loss, but a huge move in so little time. It was basically in a minute time before I knew it. Before Trump started speaking, everything was looking dandy. My trade was looking fine. He starts and boom, gone, stop loss. And I think I'm not the only one because um, it came out of nowhere. It came out of left side of the left field, I mean, and there was no way you could have expected. I think that this would have happened. So this could have happened, and I'm pretty sure, and that's why I say having a lighter tone today is maybe soothing for those who are a little pressed hard on the realities of trading.
Agreed. Samir, do you want to hop
All right,
out of
guys. Yeah,
opportunity?
I will be hopping off. So the last words that I will say, if you are from India, then we have online seminar for you guys on 31st of January. So on our official YouTube channel, which is the Fibers India, Indian channel, of course. So if you want to be a part of that online event, make sure you are subscribed to the channel and register for it. And it is going to be on 31st of January. With that being said, guys, I'll see you there and take care. And thank you for having me again. Bye bye.
Take
Thank you,
care,
Samir. Have a
Samir.
great day, my friend.
We love having you all the way from India, making the Fivers a local in India. That's amazing. That's what Samir is making possible for the Fivers and all the traders that are from India and Hindi speaking. So, Richard,
Yes, sir.
have you said yesterday you didn't have any trades. I think it was yesterday, maybe it was the day before yesterday. You said up to the last week you didn't have a trade on because of different circumstances. What about now?
I still have not gotten myself a trade yet. Yesterday's movements on the on NAS during the London session, to me, I was waiting for New York session to open up. It wasn't quite getting what I wanted during the London session, so I just waited. But I did eventually get a trade that I ended up closing a little bit earlier. So instead of it
Okay.
being a 0.5% gain, it ended up being a 0.35% gain over here.
Not bad.
And I ended up closing it. It would have been exactly a 1-to-1. It was somewhere over here. It would have been a 1-to-1 exactly. But what happened was it just did not hit my take profit due to spread. And then it started moving away, and then I ended up closing it for a little bit less than what I normally would have, but it was I think it was a 0.35-ish% gain. So this was the only trade that I took yesterday that was in the afternoon. What then happened was we had this like attempt during the New York Open, which I don't trade in anyway. I wait for a structure to be formed after the New York Open. We did get a nice bullish reaction and then another attempt to try and push up, but I did not like how not volatile, how volumetric this movement was. I wanted a deeper pullback and then a continuation. Didn't get it. And then afterwards, I had some prior arrangements, things that I needed to attend to. So by the time that I got back, we had this kind of like action, and I just decided, you know what, I'm not interested in trading this at all. I will wait until today. And then the whole of today has been this same kind of like structure, and I'm just not getting my entry point. So I have not taken a trade yet, and I probably won't be taking a trade with news coming out tonight. I suspect we're going to have this kind of movement until New York opens up, and then New York is going to have a reaction. We're going to wait for formulation of a trend, and then it's going to be time for the news to come out. So then, while I'm waiting for the trend to formulate, it's probably going to be a bit too late. So I'll just sit on my hands. I have more than enough other work to keep me busy. So I'll probably not. I'll not right now. I'll just wait.
Yes, I totally agree with that. I mean, you as a trader, we don't have to be participating in every situation, in every news event. Of course, if you have an edge on that type of scenarios, then you would want to. But that does not necessarily need to be the case for every trader. Maybe your edge is when on the other times when the market isn't volatile. Maybe it is, on another time frame. And so it's good to know when you are supposed to be pushing and pressing, and when not to. And I think for a lot of people, it's when the market is uh, being exaggerating its move. For most people, I think it's better to just stay on the sides and wait for your moment. Wait for things to calm down. And we have news today from the Fed. I mean, interest rate decision, and then I think like half an hour later, the statements. So I think probably the market is going to be looking for direction until then, waiting for direction until then. And by that time, of course, if you're living in Europe, you probably, as you are, Richard, not living in Europe, but I mean the same time zone,
Same
you're
time
probably
frame,
going to
yeah.
be, yeah, you're going to be, it's going to be over, it's going to be for another day. So the day before the news is sometimes, a lot of times is a session of compression, right? It looks for a little bit of price exploration, like price discovery, but most of the time it's more towards just holding pattern until the news comes out, and then we will see one way or the other in terms of direction. Um,
Agreed.
I think it's only fair to um, not get excited with these exciting movements in the market. It's actually, you know as a good trader is someone who is unwavered by the waves of the market, right? Who is steady regardless of what happens. And that's a skill you need to practice. We all, right? We need to maintain that practice and not get all too excited when things go bad or good. Just staying steady hand throughout the day and throughout the week. So that's great. um, Praritan Shu is talking about a intervention. I didn't read that. Maybe I missed it. But the move yesterday was because of Trump, if I'm not mistaken. Trump made everything move. By the end of the day, let me double check that. You know
I
of
think
any?
that was in the morning hours. Sorry, Victor.
Okay.
That was during the London session. UTC plus 2 1150.
Okay. So you mean the? Yeah. Okay. Okay. All right. So that was before. Okay. So but that was the. Okay. Let me double check here before I say something that may not be.
Factually
Okay.
correct.
Yes. All right. So let me check here. We had. Yeah. Okay. All right. Never mind.
Yeah, so
So
it was movement, but I don't think it was due to maybe his speech. I think the intervention, I think, is more from the Japanese banks and their Fed decision points coming into play, rather than coming off of what Trump had to say. Because when Trump had his little speech and all of that kind of like stuff, it had already started its downward movement on UJ. So it just
true.
continued with what he had to say.
Yeah, I see that now. That's a pair I did not trade.
Same.
So yeah, so I had to check it out before saying anything, and I do understand that indeed the movement in UJ started way before. That was at the beginning of London, and that might be what our viewer was referring to. By the way, everyone, we have 200 and how many? 240 likes, but that's not enough. We're always ever
Never
hungry
satisfied.
about. Yeah. We're never satisfied with this like. So I know you guys have done a great job in liking the stream, but there's more work to be done, right? And so we expect from you that you put your collaboration, your participation into making this stream uh, even bigger, even bigger. I mean, we're growing all the time. We're reaching that 100K subscribers very, very soon. But still, I mean, you got to be pushing it, and this is a group effort. That's why we're calling Alt to request your participation, your cooperation in our growth, because it's not only our growth; it's our as in you included, you the viewer included.
Yeah.
All right.
Everybody that is here participating, everybody is part of the community, the live stream community. We can only be as large as we are because of the community. We can't do it alone. So we are very, very thankful to have everybody be in, liking, subscribing, participating, chatting, sending questions. We're really very appreciative.
Someone from Nigeria, and we have as well from Johannesburg. Uh,
Yes.
that's nice. That's always nice to hear. We have people from all around the world. Hi there, Thiola. How are you doing? Thiola being and many others like Louis and others that are, uh, fixtures. They're always there in our
Yes.
community, like pillars. Not fixtures like, lively fixtures who are supporting like pillars our community. It is indeed a very this stream. I mean, Richard was talking about it. It's a symbiotic relationship, right?
Very much so.
It
Parasitic
wouldn't be
symbiote.
possible without the audience, and you know us growing means we are growing, you are growing as an audience, as a collective, because that's how I
Yeah.
see it. This is not a one-way street or one-way direction in terms of the stream, but it's something we do together. And in that on that note, someone is requesting a Eurocat analysis. What about shall you, what do
You
you say?
can, by all means, Victor, you can go to Eurocad. I just wanted to get to this comment as well from Theola saying, where I stay in South Africa, you can leave your car unlocked while you quickly buy something. I wouldn't suggest it though. Pretty good. There was a question later for Sam, but Sam has already jumped off. Now, we will have Saul, the CEO. He's going to come and join us at some point. He's a very busy person, but when he joins, this is the perfect question for him because this is right in his alley. Loving Nature Guy asking, are prop firms just booking and betting against us? How can a trader verify if their funded account is hitting the live market or just a simulation designed to fail? I think that this is a very good question that we can ask to Saul. because Saul owns and runs a prop firm, which is the Fivers. Perfect person to talk to. He will give you the absolute juiciest of details. So, loving nature guy, please stick around. So when Saul arrives, then you can ask it. We can have Saul answer this question to the best of his ability.
I think that's a cliffhanger of a comment, Richard, for everyone who's interested and who isn't interested in the answer of that question. I mean, isn't that like one of the questions everyone wants to know? Are we being B booked, A booked, and and if for anyone who might be new to the question or new to the industry, what is being asked here is, are the trades actually being placed in the market, or are they internalized as a prop firm? Meaning that if they're given or they're sent through to the market, that's A booked, and that means that whenever the trader wins, there is no risk to the broker or to the prop firm, but they win as well with the profit share. But in the case of a B book, if the trader wins, that will be as a cost to the prop firm because they internalize that flow, right? And it's not as simple as that. It's not black and white. But stay tuned for the answer of our CEO. We will definitely present him with the question. A very, very interesting question, I must say.
Yeah, I think there's a lot of people that are worried about stuff like that. What I can tell you with certainty is that the Fivers is a book. 100%. It's a book. So whether you know whether or not that's good or bad, that will be for Saul to explain. But I'll give you the short form. It's a good thing. It's a good thing. But it can also mean that there might be some limitations placed on people if they are with a book as an example, because if you lose, the company loses. But if you win, the company wins along with you. But it's a trust thing. It's that knowledge that the company that you are trading with, they only want the best traders, and they will only allow the best traders to trade along with them. There's no incentive for them to not have the best traders. Straight up. If you trade with them and they give you an account to trade with, it's because you've proven that you're a great trader. So there are B-book prop firms that rely almost entirely on evaluation payments for the company to make bank, for the company to actually make money. So yeah. Anyway.
Yes, I would say stay tuned, everyone who's interested in the extended, in-depth answer of that question. Sure, I think the suspense is high. What would be the answer? But without bringing up the suspense too high, we have from Kenya as well, your Calvin, and let's see, have any someone here from Zambia. Amazing seeing from
Zambia.
all around the world watching us and learning, and that's the whole purpose. That's the mission statement of the live trading room. It is for you to grow by watching, by seeing, by example, and you might not be agreeing with the concept or the strategy or the viewpoints, but by being exposed to them, you become a richer person in terms of knowledge and other opinions, right? So you can form and decide where's your position by listening from different traders. And we have plenty of traders for you to see, watch, and pick things that you like or perhaps don't like, but you still can learn from.
Very much so. Victor, did you want to look at EuroCAD? I've got it up on my screen now, but we can hear your opinions of EuroCAD.
Let's take a look at EuroCAD. Okay, all right. So
before we get that one, while we're waiting for you to bring your screen up, Mikhail David's asking, does props allow news trading? So does prop firms allow news trading? The Fivers does, but there's a caveat to it. So if you have a high stakes account, there is a 2-minute prior to and a 2-minute after red folder news event limitation. And the limitation is, we would prefer if you did not open up a new trade within 4 minutes, 2 minutes before a news event and 2 minutes after a red folder news event. If you already have a trade running and your stop loss or your take profit is hit while a red folder news event is playing out, so because of the red folder news, the movement pushes price up and it takes your stop loss out, that is not a problem at all. It is an existing trade. There's no penalties or anything like that. But if you have a high stakes account and you open up a new trade, so it can be a limit, a pending order, or it can be a market order during that 4-minute window, if you do lose, that's going to be a soft penalty against you. We would try to prevent people from doing that during that time. But if you already have a trade open, no problems whatsoever. So news trading is allowed, just not on the high stakes red folder news events. And only for the 4 minutes. But after the 4 minutes is over, you can put in a new trade, no problem. Victor, I can see your mask is moving, but I cannot hear a word of what you're saying because I think
Very well done picking that up, Richard. Yes, I was saying. I mean, that's not bad. I mean, knowing when I'm moving my lips is. I mean, it's good. It's good, Richard. I give it to you.
I
The
think breath, you went, and then the mask kind of like just pulsates ever so slightly.
I see.
I have to pay attention.
Good observation there. The key point for what you said is that right because of that, because we are the trades are actually going to the market, we have to make sure we keep that pooled account safe. That we have these rules, and the rules. The good thing about I think the most important thing is that you will not lose your account by trading the news. It's not a violation. It's not like we're watching there and waiting for you to fail by trading the news event. But we discourage that by not giving you the profits if you don't comply to that 2 minutes before, 2 minutes after rule, which is actually a good thing to you. That rule is actually helping people keeping their accounts and passing accounts, because there's a lot of there's a spike in risk for those who are trading, and the majority of people are and long term are not very profitable trading those high impact news anyways. So it's actually saving you from suffering from losing that account, something you don't want.
Wow, sounds so horrible when you say suffering. I was like, oh. But I understand 100%. If you have lost an account because of red folder news, you will also feel like you're suffering. It's a hard pill to swallow, especially if you feel like you could have avoided it.
For sure. Let's take a look at EuroCAD, since that was the that little nudge that I did get. Let's see. I'm going to switch to my screen
Please do.
with my mic unmuted.
I'm going to
So
keep an eye on your mask just in case.
let's see. We have on the higher time frames. If we zoom out, I mean, it's not very tempting or very attractive to be looking at this time frame all the way down, but it does make some sense for everyone to know what the bigger, the even larger time frame is talking about or is telling us. This is the monthly, of course, and we do see that there is a reversal pattern that we are now coming in. So basically, when we were moving from lower levels, this would be the logical levels that we were aiming for, meaning that we're likely going to have. This is just understanding why we need the context. This is the area where we expect price to be trending towards. And then when it gets there, it gets interesting, meaning when it gets into this area, even though it's quite wide, hugely wide, it gets interesting because you can, get the next, the sort of like an intersection if the market wants to continue or wants to reverse from it or at least have a reaction. So that's the 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 move that you want to be anticipating when the market reaches this level. I know it's in the monthly, and it will be so slow, even slower than watching paint dry. But
Yeah.
when it does signal, you want to listen, you want to know it, and you can actually, because it's the monthly, you can see as the monthly the month is getting to an end, you can already start getting your odds whether this is going to signal or not, right? With the close, with the validation, and so on. So you can start building your position as you see that this is going to be getting a signal, and by the time it gets there, you should already be in or be very close to getting your position in. And then you just hold that position for as long as you can, because it's a monthly time frame. So you see a couple of bars and you're already, a half a year later. But hopefully with your bank account laughing at everything. So that's the higher time frame, meaning the context of this block, which is part of a quasi on the highest time frame we look at. And we do have, let me double check here. We do have here a monthly fresh order block that was after we hit the relevant area. So that's why I wanted to put that into perspective. It's not just a fresh order block, it's a fresh order block with a context, with a story behind it. So the fresh order block is this one. Um, Initially, because it's just a fresh order block, you don't expect the whole area, the whole pattern, the whole momentum, the whole impulse to be completely, V-shaped reversal off of it. It's just a fresh order block, meaning you will see some kind of a reaction, but the best thing is to just expect price to go to the next level until it perhaps creates something a bit more elaborate, like a quasi on that time frame, that would indicate the market is actually ready to go in the opposite direction for a longer time. But that's still something you want to be watching. So that's the monthly time frame. It is being retest, even with a little, not so little, but still a squeeze. And on the weekly, what are we seeing? If this is the head, if we go back, where would the neckline be? Can you spot it? It's a game. Let's play that game. And it's all the way down here, to me, right? This actually, would be the structural for the weekly time frame, meaning that the market is absolutely not signaling break of structure, and it's not even close. Is telling us any of that. So it means that the expectation longer term is for the market to continue to go higher, even though you might expect, because of this monthly, maybe a push down before we continue later with that move up, right? So that's the putting things into perspective. That's the weekly. We don't have a structural break. Do we have a fresh order block to work with? And we do, right? We have a bullish one right here that we could use if market comes back to it. But in the meantime, we do have is this fresh? Let's take a little count here. The upper here, the order block at the top here is not important because the structure hasn't been broken. So the question is this tradable or not? So we go here 4, 6, 8, 9. In my book, that's still tradable, right? So that means that we have reached on the 9th candle after the creation of the order block. That's okay. That's check mark. So we can continue further. We have a monthly structure, a weekly structure to look for a short. And what do we see on the lower time frame? We actually have a quasi that is on the lower time frame indicating a reversal. You got to put things in their right perspective. This is a daily quasi, so you can't expect the monthly structures to be affected by only this. You have to wait for the monthly structure for the I mean, for the monthly reversal, for the monthly signals and structures to be constructed, which hasn't happened yet. So you should only look at this as from the daily perspective so far. So let's take a look. We have, that's the quasi. Actually, that's not the quasi, but you get the point. So this is the established uptrend. That's the neckline. That's the head. Breaks the structure, the neckline, telling us a possible reversal. And we have the first order block that could expect price to have a reaction off. It did have a reaction intraday, and I'll show you guys later. But eventually, you can see the daily hasn't closed yet, but it's most likely that we're gonna be ending, close to where we are. If that's the case, then actually we have. Do we have cat news today? It is the 28th of January, and we do have. Did we already have them? In 5 minutes, we'll have interest rate decision on the cat. So that's actually very very relevant. So the we want to be. I was gonna say we'll have, in that case we'll have to wait for the result of the interest rate decision of the
I
Bank
muted myself.
of
We have CAD news in an hour and 5 minutes. 1 hour and 5 minutes.
Okay, an hour and
Yeah.
okay. Thank you for that update. Me being mixed up on the time zones. It is important to wait for that news. Obviously, you don't want to be trading before the news because that can change everything, and you could be holding a bag of nothing, or worse yet, a bag of hot stones. You don't want to be hot potato in your hands. So, what you want to be after that news is out, and this day or this candle is up to, close to the close of its period, you then assess whether or not it closes as either engulfing outside bar, or, well, an outside bar couldn't be, although things can still change, but something that indicates that the sellers have come and taken over the price. If it did, that to me could be an indication that the order block, the order block, which is the entry order block on the quasi, has done its job. Market react to it, it confirmed by doing it, and then we can start looking to go in that direction, right? Based on the daily quasi, meaning you would have then a fresh order block that would be created, and if and when price would come back into this daily order block. Sometimes it doesn't come back, especially if it's very off of the back of a interest rate decision. Usually it just continues to go without coming back, without retesting. So you'd have to be quick, nimble in your decision. But if it comes back, you could catch it from that order block, or maybe you can go to the lower time frames and find some reactions. I previously mentioned how the market reacted on that, the first entry order block on that. That was the first reaction. See that price comes straight into it in the opening candle of the opening gap on the weekend, opening of the weekend, and it has the reaction right there. That's not coincidence. That is the entry order block at work there. The second time around, you can see it has a little reaction, not much of a thing, but still a reaction. But eventually, it's the next order block that was the one that has and will change the market. So if I go back to the daily, right? So for the daily time frame, we'll have to wait for the market to close to have a definitive, judgment whether or not sellers, definitively came in. However, on the 4 hour, do we have a quasi? That's a question we can ask. Our quasi right here, we do have 1, 2, 3. So basically, let me double check here. Trying to give you the best of my analysis. And yes, so that means that it's for H4 order block, for H4 quasi, it's too big of a structure. So that means if we're getting an H4 structure, it has to come from the current level, meaning from this structure or not, right? So if that were to be the case, where is the neckline? If we go, this would be the head. Is there yes, there is. So this would be the neckline, right? So that will be a quasi on the H4. That meaning that in order for me, that's only me, that's me personally, in order for me to take this trade, I would have to either the market come back without creating the quasi below, come back to the daily tomorrow, and then create a reversal pattern on the 4 hour, or a reason, an H4 fresh order block, for example, for me to take the short, right? And that can happen. It doesn't have to happen all the way up there. It can happen something like this as well, right? With or without breaking the neckline. That's one scenario. The other one is that the market will actually create a quasi, given the structure that I just indicated, right? The first reaction, it breaks the neckline, presumably comes back. But the issue I have with that is we have no entry order block. So it's going to be like a toothless monster. Doesn't really offer us any advantage. So that's off off the possibilities we have. And that's that's where my analysis stops, or basically that's the buildup of the setup stops. I'm still waiting on the H4 for the market to indicate something above the other. You can start looking for possible levels where you could be participating. This could be one. That's an outside bar, right? If the market comes back, I would be looking very keenly whether or not the market, how it reacts to this level. And of course, you got those two little fellows as well, right here. I'm sure you guys can see it. If not, then perhaps you let's see if it's actually two separate levels. I like that. I like it when it's two separate levels, because that means that I can put my stop on the other side of the level, and if they're smaller, it means more tighter stops.
More
That could be more profit, right? If it reacts, I can have my stop there or above that, and run the move down. So those are the things that I'm looking for the market to reverse, but I'm not too eager. I'm not going to chase this. If it goes down and doesn't come back to give me a good entry, then I say, farewell. I'll see you next time. But if not, then I will wait for it to come to the level and then trigger me for the possible entry, which would be something like this. Not that direction, of course, the other direction, that direction, right? It will be something like that, and targeting whatever low it reached before, or perhaps some structure that is, the next one standing. That could be, I probably would have it on the weekly if it hasn't touched it yet. Just target a little bit before the weekly, because that's a nice area for the market to settle into a demand zone right there. Something like that is what I would be looking for. But as you can see, I'm aware there's a lot of volatility coming in, but my plan, at least in this occasion, tells me to just wait for the moment for everything to line up, and then you start looking for when you have a plan. Maybe that's the takeaway. When you have a plan, following the plan makes it so much easier. And holding your horses, having the timing, being disciplined. A lot of the times is having a plan that you understand, that you stand behind it, which makes it way more easier to be disciplined. For example, if I've done this, that's why I trade this way, right? If you know your numbers, if you follow this process, what kind of results you will get, and that's what you want to achieve, why would you want to deviate from it? So you just follow the plan, and if the plan tells you have to wait for tomorrow for the price to come back to that level, so be it. You're going to be waiting, right? We're not here to get we're not here for thrill-seeking purposes. We are here to execute our plan and take our profits home. So that's one thing, and I have no intention whatsoever in looking at the minutes. To me, there's no need for that. The setup is on the hourlies. The minutes is more for the execution. When I start getting ready to enter, that's when I need to get my tight entries. At least for me, you don't have to trade like I do, but that's how I trade. And hopefully that's helpful. That's Eurocat from my side.
Victor, thank you very much for that absolute legendary breakdown. I am going to have to love and leave you. I have a prior arrangement that is coming up in the next 10 minutes, and I need to prep for that. For everybody in chat, if you haven't already, please drop us a like. Please drop us a subscribe. We really appreciate your assistance in building us up to 100,000 subscribers. It is a goal of ours, and we would love to reach that goal soon. So we can only do that with you guys' inputs. So please drop us a like, drop us a subscribe, and share this YouTube channel with everybody and anybody that you think may or may not enjoy this kind of content. We are trying to build the YouTube channel, and yeah, as thanks, we will give you all some nice goodies when we reach the 100K. Victor, I will see you tomorrow. Tomorrow is when? Thursday? Thursday's tomorrow. I will see you tomorrow. Same time, same place. Everybody else, if you have questions for Victor, drop it in chat. And then, yeah, I'll see everybody tomorrow. Have a great day, everybody. Do be careful of the US news that's coming out a little bit later. Try not to FOMO into any sort of trades.
Indeed, well said, Richard. Thank you for your support, your everything you do to make this happen in the live trading room, in front of the camera as well as in the background. Thank you.
It's only a pleasure. All right, guys, have a great day. Remy, you yourself as well. Have a good day, my friend. All right, I'm out. Cheers.
Bye-bye. We have a question here from Ni Bidita Haloy. I hope I pronounced your name correctly. Why you all traders don't discuss cricket here? Well, it's the same reason we're not discussing tennis or any other random sport. All right, so let's see. Let's take a look at... I'm looking at the chat to see what you guys are up to. What are your questions? If you have any questions, actually, now is the moment to put them in the chat. Have us answering them to the best of our ability. I don't promise I will take every question, but I will do my best to look at the chat, and answer as best as I can if it fits the flow of the moment, of course. All right, so let's take a look at the chat. So we have let's take a look at still looking at the chat. Someone asking about dollar yen. We can take a look at that. Not sure we have enough time, because we have later on the CEO of the Fivers who is joining us. He being very busy, we are very glad and honored to have him on our trading room. So it's going to be fun when he gets here and starts showing us, what are the what trades is he, what setups is he looking at, how is he going to. He's a scalper, so all those scalpers out there, you want to be watching him. He has a lot of experience. He's a very good trader. So you want to be watching him and, maybe ask the questions you always wanted to ask a scalper, a professional, a veteran in the market. That is the CEO of the Fivers, who is coming on in about maybe a little bit more than 5 minutes. So someone asking here, let me check here. Okay, all right. We have being grateful. I like that. Perfect. All right. Okay, I get it. Trading is a game. Is it not? Yes, it is. Perfect. Yes, it is. It's actually a game. Actually, our whole life is kind of a game. Not talking trivially about life. I mean, life is sacred and all, but you could watch it. You could frame it in sort of a game. You want to level up and do better, and it's like a competition with yourself, meaning trying to progress into better places, better qualities of life. In that perspective, the whole life is a game indeed. Skill Riot 17, that's exactly what I'm trying to convey here. All right, so we have the market reacting to that squeezing by a pipette little swing low we had on EuroCAD. But let's go take a look at Euro Dollar before we have our CEO who would be or will be joining us soon. On the monthly time frame, we have pushed through the structures we have been talking about: the fresh order block, the monthly order block from the entry from the left side. These are supply areas. Price is not supposed to go higher if we were supposed to be pushing, having a reaction and reversing off of them. However, it's not over until it's actually over, meaning the market can still reverse and come back and go the other way. It does that all the time, even though at the moment you might think EU is going to fly to the moon and so on. All of that can change in a week's time. Sentiment can change, or maybe we don't have that much time, right? It's only 3 trading days if you count today as well, right? So it doesn't have a lot of time. But this is the level you would want to be watching. You want to be watching whether or not this weekend or this month, to be more precise, the market closes above or below 119.18.8, right? This level right here, because that changes the whole thing. If it isn't, if it can close above, it still leaves the door open for a reaction for the market, even though it doesn't seem like that could happen. Yes, it can happen. And if we close above, right, that tells us definitively that the order block that was supposed to be a supply zone no longer is, or it's not perceived as one, right? And also the one we have behind, because that's even lower, that would mean that we need to focus for the next level, which is that of the order block above us, right? So it tells us of a lot just by looking at the close of this month. Very simple practice, but very powerful, right? It can change your whole perspective of what to expect. Doesn't mean it's going to go straight up, but you know that the chances that it will eventually be going up are markedly bigger. Okay, so we have that is one thing. Let's take a look at the weekly. The weekly is clearly not holding back on that order block as well. That's not a very important order block anymore, because it already had its first retest. And looking at the number of candles, it looks like it wasn't even fresh, or was it? 2, 4, 6, 8, 10. Yes, it wasn't technically fresh, so there wasn't actually a lot of reasons to be looking at that order block. Basically, we broke that line, and now we are on the lower time frame. We are still in the breakout territory, meaning everything that is, whenever we hold this line during the day, during the week, and the month, will be perceived as the breakout is holding, and we're going to be pushing much higher. That's what it tells us, right? And every time we dip below that line, it tells us, the market is getting weaker. We're not holding the line. Maybe this is a fake out, right? So you want to be watching that line. The same line that we talked about, is it? Yes, it is the same line that is important for the monthly, the conclusion whether or not that structure is still holding or not. What else do we have? We do have a TP that was projected in October last year, which has a good chance, especially now with that beautiful breakout of being reached. What else do we see? We have a fresh order block here. Doesn't seem like it's going to be hit anytime soon. On the daily time frame, the reversal pattern, right, did not signal here, right? You can see it did not signal here. It did have a reaction, but not a signal. Another reaction, but not a signal. And it did, of course, did not signal there as well. So basically, we had already, before this top was taken out, we had the only structure that was indicating a possible reversal, capitulating or being invalidated, meaning the likelihood of this happening was growing as we closed on this candle. That was already the first definitive indication that the market was getting ready for a bigger move in that direction. Of course, we didn't expect Trump yesterday saying and giving those statements, making price reacting this much. So I don't have anything on the daily. This structure is let's clean that up. This structure is out of the question. It's been validated. The whole pattern. So the daily, all of these are then now considered gone. Even the quasi on the lower time frame there, all of them are gone and not useful anymore. So let's see on the 4 hour, what are we seeing? We do have a fresh order block, and I was talking about this at the beginning of the stream. Now we have we did have a structure. It's not a structure that I trade regularly. Actually, I don't even trade it on my main strategy. I don't use structures that are so far to the left that are even you have to scroll like I'm doing right now. I don't do that. Why? Because they're not that effective, right? They are not fresh. They're not they even if they haven't been retested before. To me, they're not fresh, right? This is the order block that I indicated before, and but because we didn't have any other structure, right? Once we broke that level, we had the breakout before, not Trump's, but before we had this breakout earlier, that breakout. This was the only level that was left. That actually, yes, that was the only level we had. If we look for the lower time frames, you will see that the price actually reacted from it, off of it. This is the breakout, and you can see how the market, even while it is an order block from way back. When was this? Let me scroll it for you guys to see. It was a structure from 2021, an H4 order block from 2021 all the way June to present time. And you can see how the market reacts to it, which is actually what I wanted to show you guys. Gotta know when to use these structures. They're not good for trading off of them any given time, but when there's nothing else on technical analysis to guide us to indicate when we can expect some kind of a reaction, you can see that the market reacted. That's not the one that I was looking for. Market reacted nicely off of that. We talked about that yesterday, how the market and reacted again on another indication, on another occasion, and eventually broke out and continue. That was the Trump's moment. He started saying things about the weakness of the dollar and things like that. But these were before these occasions or this price action, and that is because of this H4 order block, right? And you can use that information to your advantage next time the situation is the same, where we have a breakout or breakdown, and we don't have anything. We don't have an ATR anymore because it's already past the ATR, right? So if you do have an ATR, let's say it hasn't reached 100% yet, then that could be a target, right? A reasonable target to have. But once it's over 100, then it's anyone's guess. How high it can go, and then you can use these levels from before, which are totally not fresh, but still very useful. If you measure the reaction we had, that's a 31 pip reaction, right? The first time around, and the second time around was a 15 pips of a reaction. That's plenty for you to catch a piece of it and be nicely profitable with it. That's what I wanted to share. Let's go back to the H4 to see if we have a trade or something setting up. So that's the breakout, a beautiful breakout we had. We did have a H4 order block, which was at 11 o'clock was valid. So if you go at 11 o'clock, you can see that at that time, there wasn't a lot we can trade, not on the H2, and actually nothing else afterwards. There was this one after 11, but it hasn't been reached yet, which is this order block, and it doesn't seem like that's going to be something that the market is going to use to move in the downside to the going south. So there you go. That's the order block price did not come back, and I would be trading the overlap, right? Where you have the H4 and H1. The market just continued to go lower. It doesn't make a lot of it does make a lot of sense because this move was just a huge huge move. As we talked, 230 something, over 300% what it normally does, and price coming back to settle, perhaps to retest this breakout level makes a lot of sense. And maybe even squeezing it a little bit as price, doesn't always react precisely on the level before, it likes to fake people or make people get in and in certain trades, manipulate people thinking it's going to go much lower before it actually reverses. So that's I don't see any this would be the area that I would be looking for a short, because the order block is there. We have reached we have put in a very stretched high, local high there. I would want to trade short this level, but only if there isn't a huge news, just like the one that caused this to happen. Meaning, if Trump were coming on and saying things, or maybe later on there's a big driver like the interest rate decision on the Fed, or maybe afterwards, after the statements, I want to be watching that the move into this order block isn't impulsive as well. Because if it is, I don't want to be taking a trade that is basically the retrace for that continuation, right? That's, you don't want to be ignoring the market structure. So we did have the initial impulse, and you don't want to be going against that. So you want to be clear that if we come back to for this order block, it's going to be something decelerated, not impulsive. Maybe a little bit at the beginning, but as soon as we get near, we start seeing deceleration, market going sideways, and something like that before going lower. That's the kind of price action you want to be watching if you want to trade this short. Even if it happens, I don't know if it's going to happen. Maybe it's just going to drift down and not give you that opportunity. We'll have to see. That's one trading idea, and the other one is the break and retest that we talked before, right? Break and retest and continuation. So not taking the long from the breakout line, blindly. I wouldn't do that. I would wait for the market to reach the level, and then we can start reading price action. Is it reacting off of it or not? Is it creating bullish structure? Even if it goes below it, it can still trigger you long if it starts creating those bullish reversals. Or maybe a double bottom, maybe a quasi, all kinds of patterns the market uses to indicate that it wants to move back. And you have to be patient. We have to be patient to wait for that very moment where everything lines up, and you say, okay, this break and retest is doing what it's supposed to be doing to signal us that the market is ready for the next leg up, right? We don't know that. We never know that in advance. We can only have probabilities. But so far, this is the only structure that I'm interested in. There is one much lower. That's the H4, where the whole movement started. So how many candles are there? 4, 6, 8. It looks like we are, it's going to take some time before we get to that level. And we clearly have a obstructions or lines of defense in the middle on our way getting there. So it's cool to, it's a good thing to wait for the market to actually do that. We have stay tuned, everyone. Remember, we have soon we will have the CEO of the Fivers with us. In the meantime, don't forget to like our stream. I mean, you have the CEO, a veteran coming in and showing you trading tricks and tips. That's, if that's not worth a like and a subscribe, then I don't know what is. All right, so taking a look here, we have Saul in the background. Whenever you're ready, Saul, let us know. All right, perfect. Saul is ready. So Here we have there you go. Saul, how are you doing, my friend?
Hey guys, how you doing? How are you, Victor? How are your traders? How's everything?
Great, great. We're doing great, and now even better. Now you have joined us, Saul. How has this week been? I mean, it's been a very volatile week. How is it on your side of things?
Actually, pretty good on my personal trading. Also on the company trading. So yeah, volatility is good.
Perfect, perfect. Can we show your chart? Because of course the audience is sticking around. They are liking our stream to watch you trade. Can we show your screen?
Yeah, sure.
All right, here we go. All right, this is the actual account that Soul trades when he is on the live trading room. What pairs are you looking at today, Saul?
Yeah, of course, it's hard to not talk about silver and gold. They've been just flying up. So like any pullback, sometimes it's hard to join these kind of impulses. But really, if we see, how clear these mid-range demand areas have been created, any pullback towards those areas are great opportunities to join the movement. I'm anticipating the price action to stay similar to the second half of last year. Impulses, some consolidation, and then impulses. So until something fundamental and structural changes, I think any pullback towards those mid-range demand areas, they're great opportunities to join the trends. That's for gold. Of course, for silver, the same. Silver has been a great surprise. And yeah, of course, oil, which is what's kind of stuck, and it's now is shown with this tension between the US and Iran. There we might expect some volatility over there. We already see some price action pushing towards the upside. I don't know if that's something that's going to materialize on anything specific, but of course, to have an eye open over there. And of course, the currencies. The stocks have been relatively quiet. Crypto is the same, but the currencies have been also impulsing and with good volatility. I was trading recently. I was trading dollar yen with great volatility. From all those forex pairs, with this last impulse, we can see it on Euro USD and dollar yen. I like dollar yen. This big drop. I think that's this is a good start of the next. The continuation to the if we see all this range. So looks like a good start to go and revisit the lower range of the lower part of this range. So we have here like multiple pips still awaiting. So if I zoom in again, we can see the gap. Gaps are always good key areas to wait for retracements towards those. So we had the gap. We already retraced towards the gap for one time.
Beautifully.
We can see that one, and we reacted. But now this reaction is also like a fresh supply, right? So the reaction itself was also a strong reaction. So a pullback towards that area is also a good opportunity. Let me see if we zoom in, if we can see something else. We have this right where we're now. Looks like there might be some resistance. Nothing super strong, but there might be something there. And something. Let me go back a little bit. And we have this level. We had a nice run from this level. And of course the main area we marked up there. So right at this moment, nothing super, nothing super convincing. But I think on retracements towards those areas will be good opportunities to keep shorting. If I zoom in even more, yeah, we have some resistance over there. My overall bias would stay to the short side. I just want to make sure if I start shorting that we do not break, to the upside, and then we'll get caught on the wrong side. So short on dollar yen, long for euro USD. We have very nice demand areas, and we're creating this compression, and this channel would have to go. Let me see if there's probably, yeah, we're here right at the support. We have this one, but this one looks bit cleaner. So if we can continue forming this channel, this compression towards the key demands, those are great opportunity to buy. Let's just remember, in terms of supply and demand, when a channel like this is forming, we're already consuming all the supply and demand, right? So we had, on real time, we had some kind of supply at these levels that was already consumed. This one created a new supply that it was already tested. This one created a new supply that is going to be tested. So as long as we can stay, in this formation, which is the weak formation, and we meet suddenly a very strong demand area. This is not super strong, but this one down here is stronger. Then we meet. In this case, we meet demand, so there's buying action, and then all the supplies have already been consumed. So there's nothing to stop the strong movement to the upside. So this is one of my favorite patterns. As long as it continues this way, and I'll be looking for buying opportunities. So it's the same alignment. It's shorting. It's buying euro here against the dollar, and it's selling dollar against the yen. Let me see euro yen. What is it doing? Yeah, this one is a bit more mixed because we have this conflict. But yeah, that's my analysis. Dollar CAD also looking good. Let's see, what can we find? Yeah, so we have the extreme. We have a good reaction here. Let me see if we can do something else. There might be something here. And then we have a good one that it was already tested, and we're reacting from that one. So I need kind of a pullback or something like that, or maybe we're going to break from this level, and then it will create like fresh supply. But it looks like my overall, I don't have a great setup, but the overall bias would be short, to the short side. That's it. It's a matter of now waiting for a good setup and trying to catch one of these opportunities. I want to see. Yeah, I think the best volatility is on dollar yen. We're having good impulses over there. Like each one of these ranges, it's above 10 pips. So it's relatively easy to catch a couple of pips in between those ranges. That's the one I would be looking for. Let me see. I'll try to get a couple here. If we can go a bit higher here on dollar yen, I'll try to short to see if I can grab a couple of pips. I'll give it a minute before start placing my first trades.
Yes, that's thank you for that overview of all the pairs that you've been watching. So, with a lot of interest, I'm sure people are glued to their screen to watch how you break your analysis and what your pair selection is looking today. I can see totally the levels that we're putting on the different pairs. One I wanted to ask you about is let's take a look at perhaps on EU. Do you trade? Are you looking at that broken level, the level we had before, which is at 11980, 18? I mean, which is the on the higher time frame, so on the daily, it's the high, the broken level of 17th of September. Do you see some levels there that could be that is on your radar for a possible, you know, confluence with other levels on the lower time frame for you to take a trade? The level is 11918, which is the breakout level for EU.
119.18 or 80? 80.
18, yes, 119 19188.
19188. So it's around this. It's around the the demand area I mark here. Let me see it on lower time frames. Yeah, that's the mid range demand I marked. What was the question around that area?
No, the question is, would the fact that that's the breakout level from if you look at the daily time frame,
Mhm.
that was the level that was broken
The
before.
resistance, yeah.
Exactly, and we know that the market uses these levels over and over again by flipping them. When there's resistance, they become support, and so on. Would that be something that you use in your confluence with the lower time frames to look for an entry there, perhaps, or to to use it in your analysis?
Yeah. Those areas, you're right. Those are the swap areas where, in this case, resistance become support. But the way I also want to zoom in and to understand where exactly the swap happened, because you also want to see in terms of a price action that there was a key level being formed. So if I zoom to this last leg, I am anticipating those levels to act. I see the gap, you see here on the daily, you see this gap. So I think that gap is the initiation of that, what eventually broke the resistance levels. So this gap is this bottom area that I marked. So I think that's going to be the more significant level to trade base off. That's the that's
the ignition.
Yeah, the ignition. I forgot the technical word for it. And of course, at the level you mark, which is right at the the where this spikes is there, there's also we mark it as a mid range demand. Let me zoom out. Yeah, which is right there. But if I zoom to this one, even on the 5-minute chart, we can see there's there's no great initiation there of demand. I would like to see at that level something more similar to this candle. Something that you can see clearly that demand was created, which is something like that's like this, like a big impulse, and you don't see that in the level we're discussing. So that would be the only thing to consider. But you do see it right, like here we can see the initiation where the market just started up and it never went back. But yeah, let's keep an eye open, and of course we always see like price action, and I want to make sure when we reach those levels that that we keep this weak movement towards it, and maybe to see like some signals on price action that will tell us, okay, we're turning around now, let's buy now. But yeah.
One question I think I have, so it's rather a selfish question, but I think it's for a benefit of everyone who's listening. Yesterday, we had a huge candle on EU and many other majors. Huge candle. We were already at 130%, the range, the average range for a given day, and then came Trump and had his speech. The market starts moving very rapidly. If you're watching the trade, if you're trading at that moment, you don't have any position in. What is your first instinction? Is this is that a signal for you to do something, or how do you handle that situation?
like the fact that Trump's like reaction from
Let me put the context. We have it's the end of the day, right?
yeah.
The market is basically, if there weren't anything happening, it would be at the top of the day, probably will not be spiking up, will not be breaking up, will not be doing anything, just decelerating. However, on let's say financial juice, there comes a red signal. Trump, we know Trump triggers the market a lot.
Mhm.
He's talking, the market starts moving in 1 minute candle, it shoots up. What is your reaction? Is that a reason for you to not do anything because it's too crazy, or is that the call for you to get in and start looking for very fast action on the charts as
No,
a
no,
scalp?
I treat those kind of reactions to Trump's tweets. For me, they are like news events, and whenever these unbased volatility comes into the market, the technical patterns break down, or key levels are non-respected anymore. So if I've been there trying to profit on tweet on Trump's volatility, and I haven't succeeded. Because you have many times you don't even have like directional volatility. Like you have like similar to news, you have like spikes. You think you can go up, and then it reverses, or you expecting for, you try to to fade the top, but it continues up. So for me, trading in between high impact events is the best, because then I kind of the market is more predictable to me. When Trump comes in, um, it just breaks everything, all my models. So I just prefer to stay back. Okay, I see.
I
Sorry, Victor. So, but I see we had the reaction to the downside. So it's kind of creating good momentum to the downside. We're right now at this um, support level. So I expect some pullbacks from this area, and I think after pullback will be a good opportunity to start joining the downside. We'll see how this go. I'll keep an eye open over here, and I'll start building. Let me see. Yeah. Okay. I wanted to go to the top of that candle.
mhm.
That way, I'll have just in one candle, I have the 3 pip profit I'm looking for. So I need a little pullback, and I'll try to join the sellish market, the sell market. That's aligned with my overall bias, and and I like the setup also. So let's see if we can have it.
Market pushing through that demand zone.
Yeah, which is good, because that's only confirms like kind of the momentum. There should be some support around this area. That was like kind of, if we see there was a big resistance that it was invalidated. So this is like the first retest towards that area. So I would be surprised if we don't see any reaction to the upside. But even if we don't see it, that would all confirm the momentum to the downside, and then joining that moment would be also good.
So basically, what you're doing is you are watching. You have a bias, which is you see the momentum, you want to go short,
Yeah.
and you're looking for the opportunity to go short. And that is one of those things are when you identify a demand zone from which you expect kind of a reaction for a better price to get in on your short. That makes a
Yeah.
lot of sense.
Because right now, going long, that would be the retest trade, right? Like
Mhm.
we broke the resistance. There was a lot of resistance. Look how many times it held. Now
Yeah.
we managed back here. We managed to break through, and this is the
Mhm.
first time we're going. This is a swap zone, right? There was
Mhm.
this resistance that now should become support. So let's see if we can have some support coming in. And if we do, and then I have some deceleration, then I can start selling.
I can see the retest of that order block on the 1 minute, meaning the price is going to try to go a little bit higher for a couple of pips, likely. There we go. That's the reaction. But there's that order block. To me, those are order blocks where you are targeting for the market to get in, which is at the end of the 5 minute, the top of the 5 minute candle you just indicated.
Yeah, I want to. You can see the indecision, in the in the candle. I'll start very, very slow.
You have a sell position there.
Yeah, but it's just my, to test the waters. I'm not really invested right now in this position. Just because I see the indecision. Let's see if we can, if we can retest the low, we'll make our 3 pips. But this might continue. If we manage to break that level down, then we might go all the way to the next level, which is down here. So I just start slow, just to to be a bit engaged in the trade, to feel it.
Action.
Yeah, but I start very, very small, just to allow myself the option to scale.
And that supply zone, is that the where you would like to reconsider the position?
This one,
Yes.
yeah. So we can see there was a point of decision right there. There was like indecision and then a strong movement to the downside. So this is kind of a tiny supply area I would like to also add into the position, in case we go there. And if we don't stop, if we break through it, that's also a signal for me, because then it's also it's kind of my some of my mental stops will be around there. Okay, if I get there very with a lot of lot size allocated, and we break through it, then that's a good point of reducing size or whatever.
Yeah, the market is not supposed to break it if your read on the market is correct.
Yeah, I just or maybe break it, but after a reaction. Okay, so.
I like the silence in between, because it shows we are concentrating on price action, and that's a good thing, I think. Do you keep quiet when you're trading? Are you a type of person that you need music, you need sound, you need people around you, to concentrate? Which side of a concentration person are you?
No, definitely not. No, I don't need people and noise. I do need to focus a little bit. No, I don't need. I need no music and no everything. And I remember when I was years ago, when I was trading, from home. That was my main activity, with the kids around and screaming and everything. It was super disturbing. So yeah, when I'm training, I prefer to stay focused. Okay, so I saw the reaction. I saw the price action, and I saw how the selling pressure came in. So that's why I added selling positions. Now let's see if we manage to break.
That was very quick, though. I didn't see that.
Yeah, because
Of course,
I don't think you see my training window.
we
But
don't.
yeah, but I started down here. I started with just one trade with one lot, and I added, as I saw the price action, I added two more, and then we're already 4 pips in profit, so you can let's say take one off or whatever it is, or just take the full profit. Um, let's see if we can um, get to the next support, which is down here where the profit line is right now. Let me
Um,
see. On the
and
5 minute charts, we had like a potential um, turning candle, reversing candle, which failed. So let's see if we can see some
follow through.
continuation, follow through to
Yeah,
the downside. That was a very strong selling candle also, this last one. So let's see if we can
nice.
hold ours for a bit more until we see um, bullish price action, and then at that point we will want to take our profits. For example, if this closes right now, this is going to close as an indecision candle. Okay, there was some selling pressure at the end. Let's see. Let's see if we can break the last tick of it. It's strong. It's where these ticks are also there. So it's kind of a 1 minute support. Let's see if there's some follow through. But it's already it's already past the our average target, which tends to be 5 pips. So we just grab those profits over there. And now let's see. We created a new selling area. So if we revisit it, we might try to sell again from that area. Let's wait and see.
Someone is asking if you're using magic keys in your trading.
No, it's not the magic keys. If you go here, to the
We can't see it, but if people watch where you're clicking, and they do that on their MP5, they will see what you're referring to. And I'm sure they have the MP5 nearby. They can see that there are levels, there are ladder, and you can also see the tick chart usually if you have it enabled. And that's where you're taking your trades, right?
correct. So this button right here opens the depth of market. And I only use it to set like my lot size, and then you have like a sell button and a buy button, and that's all I need, to place my trades quickly. This account specifically, I turn it into a netting account, so you can see now if I add or reduce trades, it will average all of them into one single entry line, which also makes things a bit easier. Instead of having like a lot of trades all over. But yeah, so just for for managing the trades, it's a bit easier.
Yes, and that was the reason why I didn't. It was a bit hard for me to watch when you added the position,
Increased,
because
yeah,
it's still one line. It only changes from 1 to 3, but if you're not actually focusing on the number, the lot size, then you would miss it.
yeah, correct. And I don't know how on the stream how clear is the lot size down here, but yeah, I see what you're saying. Like when you add or reduce, keeps the same line, and then you miss if a trade
Yes.
was added. But basically, back here, when I saw this candle being formatting, after when you see it close at the bottom, you expect some continuation to follow and to the downside. So that's
hmm
why I added the two more lots. That was the
You
idea.
you have so you have a keen sense of what the market is telling you, right? You just describe how that reversal candle or the bullish candle on the 5 minute, I think it was, failed, and you kind of, quote unquote, predicted that the market, if it would break, it would have like a follow through movement. Also, where you added the two positions extra, the two lots, you said after it rejected, or it, it it has selling pressure, that's where you got in, which turned out to be the beginning of another leg down of, a couple of pips.
Hmm.
For someone who is new to the charts, or even if they're not new, they think, or they feel that they do not have that literacy, right? That ability to read the market.
Hmm.
What would you recommend them they do? What practice would they? What habits would they need to practice to to develop that skill, like you have after so much trading time, where you can read the market and having a pretty good idea what's going to happen next?
Um, I think that's only it's screen time. Nothing more than that. Um, when you go surf, and surfers, they can anticipate, okay, when is the next wave is going to come. I was fascinated the first time I was in a surfing lesson, and for you don't experience nothing differently, but the instructor tells you, okay, get ready, the wave is coming, and he sees it, like he senses it before the wave is even created. So it's kind of the same, and I don't think it's, unless you're going to become a 1 minute scalper, but probably it's not something you need to develop. You know what I mean? um,
Hmm.
I think building in layers is sufficient. I mean, if you start by recognizing key levels, and recognizing the patterns and biases, and all of that, that's a great start. Not everyone needs to go into the 1 minute chart and scalp the 1 minute chart in order to become successful. I think that's it's a great thing to have, but it's not a must have. That's something, it's very, very, very specific to someone who wants to trade this way. Um, but I would start by getting your foundations in place, and understanding supply and demand, and understanding strong movements against weak movements, and key levels recognition, pattern recognition, and then risk management, the risk allocation. um, you certainly don't need to go into this kind of expertise, not at first. That's only comes with times, with time.
Thank you for that answer. I really like that. There is the Bank of Canada with their interest rate decision in 2 minutes and some seconds.
Hmm.
That's going to be interesting. A CAD news, a major CAD news. So you already said when the news comes, you don't want to be in the market. You don't want to be
Yeah.
trading. You want to be out of the market. The opposite.
Yeah.
Um, is there anything? Do you like watching these news coming out? Or is it something you steer off of?
No, I do like. Let's watch together, and maybe I'll reduce risk considerably, and maybe we can trade it together. So
Okay.
maybe I'll just go with micro lots. If I
Okay.
was trading just my trades, my regular trades, but let me
Hmm.
find dollar CAD. You say, right? Like Canadian.
Yes. Canadian dollar
Yeah. Let me
could be
go.
dollar CAD.
So I got dollar CAD here. Okay, so first is here. I'll watch the spread if it widens. What my technical analysis would be, that's my selling area. Right where we at would be selling. Let me see that I'm not making any mistake. Okay, I'm going very, very, just for the pip. Okay, not for the money.
Mhm.
So that would be a selling area for me. And the next one would be here. We can see we've been this very strong impulse to the downside. Nothing very good here. I don't know. We would need to go all over there. Let's just based on 1 minute price action if we can grab something.
Do I see it correctly that your position is a tenth of a micro lot?
Yeah, it's a very small one.
Good, good.
I don't even see. Why don't I see it? Dollar CAD. Why don't I see my entry line? Trade levels. This is weird.
So the news is coming out, and maybe it's already out. I think it is. Let me check what the timing is. Yes, about 20 seconds ago. But it doesn't seem to have had any reaction at all. The rate has been kept unchanged. We see that on Forex Factory News, but no reaction. Is that that's odd?
It is, and I don't know what I don't see my trade on the chart. Dollar CAD, USD CAD, sell. USD CAD. I'm on the right chart. What? Look at where's my. How did that happen?
Yeah, that was that explains why you couldn't see it, because it's way lower.
But how it did? That's very strange. Maybe there's something with the micro lots.
Not sure.
No, I'll have that reviewed. It's very strange.
Yes. All right. So the market, it was a non-event basically. The market didn't react to the news. The interest rate was kept unchanged. For those who are interested, the Bank of Canada did not change its interest rate. Normally, you would expect some kind of a big move up and down, and then maybe a direction, but nothing really happened. And that's on the 1 minute. So that's a bit odd. Maybe the news market participants are waiting for another maybe another event to happen, and so they're waiting for the actual move. Who knows? But okay, let's let's continue. So we have we had a question from a person before. So we know it's not a question directed to price action and the chart and technical analysis. It's more of a question of our prop firm, the Fivers. Shall I take the question?
Yeah,
I think it's a question a lot of traders would ask themselves, or would have asked themselves when they consider us to join. And one of the question is, let me check. The question is here. Loving nature, exactly. That's the question. It says, are prop firms just booking and betting against us? How can a trader verify if their funded account is hitting the live market or just simulation designed to fool? It's a valid question that everyone who wants to get a position in this industry will ask themselves. So, are prop firm just booking? And perhaps the better question is, what is the Fivers doing in this regard?
Yeah. So just to make to clarify something, booking is not betting against. Like you can just book, like not taking a trade to the market, and you can also take the opposite position to a trader. Like you can take a certain signal and take the opposite, which is also not trading against the trader. It's just flipping the position. So the way we, I don't know how other firms operate, but we have the ability. We have the funded accounts connected to different and multiple aggregated accounts, and each one of those accounts do different things. So some of them go straight to the market, some of them book, some of them flip the orders, some of them just net all the accounts. Many things take even, if we if we find very good traders on very small accounts, for example. So that's also something we can do if there's a great trader, but capitalized, taking very, very small trades. Maybe we can leverage on that trade. We can take that same position, but to leverage it, to take it out to the market even bigger. So there's basically the ability to do everything. So if we're right, we will know how to allocate the different funded accounts into these pool accounts, and then the pool accounts will do different things, different interactions with the liquidity providers. But just to make clear, very few of the accounts go straight to the LPs. Most of them are connected to the pool accounts before the orders are taken out to the LPs. So yeah, I can tell you, I cannot tell you like trade by trade what's happening with your trade behind the scenes, but they're all connected to the accounts, and then the accounts do different interactions with the LPs.
Yes, that's as we alluded to this question before. It's not a black and white kind of situation, because it's there are many grades of shades, right? And for those traders who are thinking, all right, so that makes sense, or maybe they don't understand it completely. Basically, what Saul is telling us here is that the the firm has, its responsibility is to make profit out of these signals, and if they will do whatever, and that is their, their fiduciary, or they're not fiduciary, but their responsibility to keep the to be as profitable as possible, right? You want that from the profit firm to be, and they will do, increase or decrease in how they see the edge of each trader. Isn't that right, Saul? Because if you see a trader that has good edge, you want to profit more of that trader, and you see someone who may not be such a robust has a robust edge, you want to limit your exposure to that trader, right? You don't want to be plain vanilla with everyone.
Correct. Correct.
I'm having, let me check here. I'm having a little bit of a difficulty. I can't hear you, Saul. So I'm checking my audio here, what's happening. In the meantime, let me check. I'm going to, I think you can hear me.
I do.
Yes, you can. Okay. So let me disconnect my sound and connect back. For some reason, I'm not able to hear you. It's probably, could you say something?
Yeah, sure.
Okay, back. Thank you.
You're good.
That was that was a little bit scary. I mean, not being able to hear you is a bit of a important part.
It is.
Yes. So yes, I think that's a very you talked about this this topic openly and freely, and I like that about us, about the five, is that we can give that kind of transparency, and you've done this on many occasions on a podcast, on very popular podcasts out there, and I think it's well, that's just my opinion, but I think it's what the traders need to hear, right? The raw truth about the what happening with our trades and with the funded account, right? And this is it, coming straight from our CEO,
Just
explaining
but
about
but,
it. Go
but
ahead.
by the way, it's not different than what the brokers do. Okay, like many brokers, their default risk approach is to be book traders. They know most of traders are not being profitable, and they by default be book until they understand someone is profitable and they can, it's worth for them to a book him completely or c book him somehow, and they do the same. The only commitment brokers and props should have for the traders is to pay them at the end of the day, right? But just so that this is not something that props do. This is also a risk approach that licensed brokers do. So
Yeah, it's an industry practice.
Yeah, it's not uncommon. Let's go though.
Yeah, and it's that's the risk department's job, right? To manage the risk of the signals, right? Each signal, each trade, each pool, not one individually, but each pool
Yeah,
and type of trader has a certain risk to it, and that that they need to manage that risk and mitigate it as much as they can.
correct.
Awesome, awesome. Saul, what is the market? Let's see. The It's not frozen. We have people from Latino America saying hello. Hello to
Hello.
everyone from Latin America.
See how what a good reaction we got from our levels. This dollar yen, what we traded, we mentioned this level together, and we're
Yes.
reacting right now. We're reacting to it. But I can see we might break it through. You can see we had the reaction of this candle, and then we pulled up again, and it seems like it's going to happen the same.
Again.
Now, if this breaks, let's see if we can catch a little. Okay, so for some reason on my cat chart it was bad execution. I don't know what happened there. Let me see.
Now it's better.
Now it's better, but that was very strange.
Perhaps the news, right?
Yeah,
Maybe.
maybe around the news. I don't know. That's I've never seen that. Anyway, let me close the cat one. Let's go back to the dollar yen. This is money time, right? Let's see if we can. That's a very nice candle, bullish candle at the level that. Let's see if that holds or breaks up.
Mm-hmm. Everyone who's watching, who is enjoying this stream, please do not forget to hit the like button, subscribe to the channel. If you're enjoying this, that's a pretty good sign that, next step is liking the stream, subscribing the channel. We are on a mission to hit 100K subscribers. It's going to happen soon. And you want that to happen sooner than later because we're going to have massive, massive giveaways. Saul here can attest to that. We have done that in the past, and 100K is a major. It's a six-figure number in, so it's gonna be huge. I don't know the details, but it's gonna be huge. You want us to reach that level as soon as possible.
Yeah. So, that candle here was the signal to go up. So many times, if that's going to fail and we're going to break that down, that's a good stop loss level. Okay. If I choose to leave it on, then I think, okay, where am I adding to this position? And we had in the past this, we tried to get this movement to the downside. We broke up, so that this is a concept we discussed today, which is the swap zone. So if we retest now this swap zone, and we can see also around that area, we had a good initiation of this leg up, this like a good mid-range demand. That's a good area to add to that position. So let me see if we can. So you either take the loss, or I wait for market to retest this area, and then at that point I can add, and then I can average my entry price. We'll see how that works. Okay, I keep reading also price action. If I see we have like buying pressure, I can also let's give it one try. Okay, so I added two more, and you can see how I brought my break-even point down, because I want to take advantage. If we manage to turn the corner and revisit these highs, I want to be positioned for that.
Very suspenseful the last couple of minutes of our stream. Actually, the last minute, basically, of the stream. Do you let's see, it's almost 4. Do we have news coming out? This is dollar yen, 4 o'clock. We don't have any news coming out. We have in half an hour we have crude, but right now we don't have anything. We have tonight at in 4 hour time we have the interest rate decision by the Fed, and that's the reaction you were expecting. Let's see
Yeah.
if you can hit that TP right before we finish
Oh,
our.
I see. I left the micro lot on. I didn't change my lot size, so it's okay. Never mind. Won't make any money, but at least we saw the exercise
Yes.
together of the price action. So at that point, once you're in profit, you can scale down, or take the profit or whatever it is.
There you go.
You can have
That's a nice reaction there.
nice reaction. There might be some spread. There you go. Okay, so that's the trade.
Beautiful reaction. You go ahead.
No, that's it. I think we can wrap up. I do need to run to another meeting right now. But thank you, Victor. Thank you, guys. Enjoy the session. Hope we learn something together, and I'll see you next time.
Perfect. So thank you very, very much. And we will let you go. We know you're very, very busy, but we want to thank you on behalf of everyone for those precious lessons and insight into the inner workings of the Fivers. Thank you.
Bye.
Bye-bye. All right. That was the CEO of the Fivers right here with us. And that was the last minute. You could see how the market reacted. I'm always amazed how Saul and other traders who are very, very sharp on their reading skills, on their chart pattern reading skills, or the price action reading skills, because they can. It seems like amazing how we can look right across time and see what's a little bit in the future. I know it sounds weird, but that's the feeling I get. Like you get like a spicy, not a spicy, a special skill that you can have like a little window what's likely to happen in the future. It never stops to amaze me when because I do that too, but when I'm able to do that, and I'm able to see that in other traders as well. So thank you everyone for watching today, and we hope that you got a lot of good lessons, good examples of trading trading skills here at the Fivers. That's our plan, that's our game, that's our mission. So everyone is invited to our Discord community. Later on, we have a stream in about 40 minutes time, maybe a little longer than that, where we're going to be watching price action later. You can ask me more questions, more in depth perhaps, and I will be explaining a few concepts, or you can post your situation, your issues, and we'll try to discuss it together. Right? It's not a we'll try to find things among the crowds as well, in the audience, how we can position and debate the topic, and all of it, of course, for the learning experience of everyone present. All right, me included, by the way. All right, so that's it for today. Thank you very, very much. No problem, my friend. We are here, doing our best to make trading easier, or at least doable for everyone. So thank you very much. See you guys all tomorrow again. Same time, same place. Bye bye.